Good morning, everybody. Welcome to the Human Performance Lab. Okay, I think I'm starting to figure this out a little bit in terms of how I'm going to do all of this. This is this project is not easy to do. I think there's a reason why a lot of people don't trade live and do other things along those lines because this really is not the easiest thing in the world to do. But I believe in this project. I believe in you guys. I believe in development. And I believe we need to be doing this. So I'm going to continue to work on it and I'm going to continue to get to the point where I'm able to do this. And the only way I can do that is practice, make mistakes, right? Last night, I was not impressed with my performance at all. So I took some time away. I came off stream. Everybody probably knows that I was not um, yeah, veto. No, man, I can't. I got so much work to do. Are you kidding me? I really want to figure this out. This is a code that I want to crack. I want to crack this code more than anything else. I'll be going to the beach when I earn it. I appreciate the sentiment, but I will be going to the beach once I earn the right to get to the beach. Until then, I am working on this project because my heart, everything is in this because this is exactly what I want to be doing. Nothing in my life have I ever had something where, or no other point in my life have I ever had something where I've wanted to do it. Adversity comes in, I mess things up, I do whatever. Usually I'm just like, okay, you know what? Enough of this. Um, and no, this is exactly what I want to be doing. And so now how do I put it together? And that's where the practice comes in. Saturday morning, best time to start practicing. Markets aren't open, and this is the laboratory. We enter the laboratory and we practice, so we can show up Monday morning when it's time to trade, and trade focused, and then practice again in the afternoon. So I'll be here a lot this weekend, a lot. Probably I'm expecting to probably stream 16 to 20 hours this weekend, just working on the charts, working on my ability to trade. So I hope you're well, Vito. I left a short on Friday. Let's see if I'm right. You know what? I think you're absolutely spot on. But I mean, Vito, you're Vito. Guys, if you're listening right now, um, I let me tell you a little bit about Vito, okay? Some way, somehow, I came here with streaming. We have a former oil pit trader from the 90s in the stream, okay? This guy is the real deal. On the pit trader, Series 3, market maker, trading in his own account, doing his own things, mentored by some of the legends in the industry. Some way, I don't know, we had a conversation. He gave me his phone number. We talked this last week. This guy's amazing. Absolutely 100% amazing. Okay. He also has some mentorship stuff that he does. Guys, listen to me for a second. A few of you that are on here right now are going to have a chance of a lifetime, an opportunity of a lifetime. But you have to be the right person. You can't just be, oh, wow, I want to trade. I want to do this for the money and those type of things. No, 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 no. If you have a passion for trading, you have a purpose for trading. If this is something that you truly want to do for the rest of your life, and you are willing to let go of what you think you know and allow a professional to shape you. Look at yourself as a mold of clay right now. You're just a bundle, a circle, a cylinder of clay. If you're the type of person that you want to do this and you want to be shaped and molded into a trader, find DJ Vito. DJ Vito on Twitch or on TikTok, look him up and DM him. Okay. But seriously, only if you're committed. All right. A lack of commitment can be, you can smell it on a person. And one single conversation, we realize that this isn't for you, and that's okay. But don't waste anybody's time. But if you're serious and you're committed, contact him. He has some spots open, and the guy is absolutely amazing and the real deal. All right. 10, this is deep charts. So there you go. DJ, Vito, I hope that helps. Thank you so much for our conversations. Thank you so much for just being here and somehow me attracting you and your knowledge and the way that you look at things. You have helped me out tremendously over the last few days. The greatest example of trading is Derek Jeter. He made the Hall of Fame with 30% average. Exactly. And here's the key, right? What do we want? Derek Jeter's bat, or do we want his skill? Well, his bat didn't get him to the 30%. Okay. His practice, his skill did. Apex did me dirty this week. They denied my payout because of failed ID verification. You know what, 10, here's the problem with these prop firms. Okay. They have their own rules and they have fine print. Guys, these prop firms are not here for us to make money with. They're just not. Okay. They're here to make money for themselves. You got to look at these prop firms as if this is basically a new shape of Vegas. Okay. And what you see here in the charts and what you see here in terms of the companies, that's a casino. Okay. And you're walking into that casino. All right. You have to be careful because they have their own rules. They can kick you out whenever they want to, and there's nothing you can do about it. All right. And a lot of the casinos, as we know, okay, they're ran by, or controlled by, we should say, outside organizations. Vito, I think you know where I'm going with this. And they can make up their own rules as they go and the way that they want to. And so ID verification failure. Maybe you didn't make $410 in a trade and you only made 400, but you needed to trade that hit 410 and it didn't. They could fail you for that. You guys got to be careful. Okay. The only way to really take control of your trading is to get to the point where you have a cash account. All right. But in order to have a cash account, you need to have the consistency. Don't think of these prop firms right now as a bank. Think of them as a crucible, something that you have to go through to get to the point where you can get some payouts and earnings from them. But please, 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 please do not think that these prop firms are going to be your bread and butter. All right, take your payouts, save the money, open up a cash account. Vito just said, I don't trade props, but I heard daytraders.com is good. Daytraders.com, Blue Sky, the key that you want to look for in day trade and props, okay? One, watch out for high watermark drawdowns. Okay, you got to be careful with those. If anybody doesn't know what that is, put a 1 in the chat and I'll explain what a high watermark drawdown is, okay? The second thing you have to be careful when it comes to prop firms, all right, is the rules will be different from what you're going to do the evaluation and what you're going to do when you're funded, okay? When you have a methodology that works and then you pass an evaluation, but then you have to change it some way in money management or entries or something along those lines, when you get funded, it's difficult anytime you have to make that change. Okay. So just be careful with that. And then any payouts you get, please, please, please save them. Start using those to fund your cash account. and move forward with your cash, because cash is where it's at. All right. It's not going to be with these prop firms, because these prop firms can let you go at any time. They can stop payouts. They can do all sorts of stuff. I like Blue Sky because of some of the rules that they have, but they do have a change between when you are evaluated to when you are funded. And if you're going to do that, make sure you follow the rules of funded, okay? Even in the evaluation, that you don't have to change anything, but you know about it going forward. But the reason why I like Blue Sky is because they will actually, over time, there's a path for you to go into a brokerage. And once you're in a brokerage, you can stick around for a while. That's where you can make enough money to turn around and open up your cash and start doing it on your own. But you have to have the consistency. So what we're doing here is designed to, if I can get my act together, we're designed to create the framework for you to define a methodology for yourself. I'm not here to teach you how to trade. I'm here to teach you a framework that you can use, that you can pull pieces from, build your own trading plan, and trade from there. Why am I not here to teach you how to trade? Because trading is all about perception, and I'm not you. I'm not going to see the charts the same way that you do. But I can give you a framework for a step-by-step, building the foundation, building the frame itself, and then start building the floors and the levels of what you need to find consistency. And when you do that, you can build your system around it. And when you have that system, you can apply it to the live edge through these prop firms, through evaluations. It's a great place to practice. And if you're not there with a consistency, keep yourself on Sim. There's nothing wrong with trading on Sim. Here's the only issue with trading on Sim. If you turn around and you lie to yourself. So, you're in a position, and, oh, I wouldn't have done that. And then you erase that trade from your plan because maybe you made a mistake, maybe you did something else, right? That's an example of making Sim unusable. But here's the thing with Sim. Always take 30 trades. If you create a trading plan, do not change it until you have at least 30 trades in that plan. Why? Because 30 trades is the minimum you need for statistical relevance. All right? It's the minimum. Okay. Once you have 30 trades, you have statistical relevance for your methodology. If you don't have the criteria met to go live, stay Sim, make adjustments, try again, and keep doing that in Sim until you have all the requirements that you need. What's great about these prop firms, you can pay them for the evaluation and have access to data for 30, 60, 90 days, however long that they keep the evaluation going, and you still have data coming into your charts. That's a great way of doing that. It gives you the time to practice. Then once you have your 30 trades, you have the ability to be consistent, you believe in yourself, you've got that trust, go ahead and turn on the evaluation and see how you do there. But make sure that when you do your 30 trades, it's aligned to the evaluation rules, all right? That way you're aligning your plan each step of the way to what you need in order to be able to pass an evaluation. Is there any questions about that? Exactly. Was that premium? Yeah. Stop trading props straight to live. Yes, exactly. If you can go straight to live, do that. Do your cash. But again, I still advise going in Sim for at least 30 trades, especially if you're new to trading, okay? Or you're in development of building a plan and a process. There is nothing wrong with being in Sim as long as you don't hide the results from yourself, the true results. I was in Sim for a whole 2026. You guys, listen to this guy. Listen to Premeep, okay? He knows what he's talking about. He's been there. He was in Sim for most of 2026, made over 100,000 in 3 months. It's beautiful. Absolutely. Well done. Well done. See, that's a trader that's serious about their development. That's what Vito, those are the people that Vito is able to work with, and he won't work with anybody else that doesn't have at least that level of mentality. I actually bought props and learned I can't trade under rules. Yeah, exactly. And most people can't premium. That's the whole thing about all of this, right? That's why the props exist, right? To make money from the evaluations, and they create rules that makes it extremely difficult in order to be able to pass them. I'd rather swing small trades and the able to let them run. Exactly, 100%. And then get to the point where you can get to the point where you can start scaling into your positions, get larger, and then scalp some of them, scalp that range, and then still allowing your runners to run once they go. That way, if it's in a range and you're scalping around that range, you're making the revenue to support your stop in case your initial position does get stopped out. Exactly. Yep. You're good to go. Okay, but replay just jumps into when the candle forms. I wish there was something more accurate. But yeah, there is. Maybe your replay doesn't work that way, but I'm going to show you a replay, Shalabala, that does work that way. Jerry, how's it going? Yo, bro, my trading is kind of working now, but I am also enrolled in electrical program. I don't know if I should quit and take risk of trading. Jerry, okay, and this is for everybody too, all right? Trading is one of those things that can absolutely work out, but it works out best when you have a foundation. All right, do your electrical program, make that your foundation, build the trading on top of it. And when the trading's strong enough, it becomes the foundation, and now you have something to stand on. I hope that helps. But people think with a prop firm, you're going to beat the markets. Well, that's the whole problem though, DJ, right, Vito? If individuals are thinking they're going to beat the market, that's already the problem, right? Trading goes up and down, exactly. We're you it's not about beating the markets. It's about having a business, okay? And in the context of the business, it's revenue, it's expense. You're building the business from the ground up, okay? It's not about beating the markets. That whole mentality needs to shift if we're going to be consistent in the markets. Oh, you guys are awesome. I love this conversation that we're having right now. Jerry, you're so welcome. And I don't think for one second, Jerry, that I'm like, you can't follow your own dreams and passions and goals. Okay. What I'm saying is, if let's say, for example, you may be trading your foundation and trading wasn't already your foundation, and if it goes south, what do you do then? Do you still have the electrical program that you can get into? What do you do at that point in time? Now you got to build a whole new foundation again. But if you build your foundation first and you layer it with trading, focus on the electrical stuff. But once that's done and your studying is done and you're out there in the world and you're doing your thing, right? See if you can't bring trading into a level with that. And if trading is really your passion and it's, the universe is opening the doors to make that happen, that will absolutely happen. And if it doesn't happen with trading, allow it to happen with something else. Now that to become the next level above your foundation until that second level is strong enough to become its own foundation. So let me show you how you can actually trade though, or use replay to actually practice. Okay. This is a tick by tick replay. This isn't bar by bar, a bar closes. You see how everything works and runs the same way as it would live. So it's based upon the platform that you're using too and what you're practicing from. This is why I like deep charts. Deep Charts, I wouldn't say is one of the premier programs out there. That's not why I'm using it, because it has all the bells and whistles. It's the Cadillac, everybody wants it, right? No, I use it because the replay function is spot on, absolutely spot on. And because of that, here we are. Jerry, you're right, man. I think I can also save money from electrical and invest it into swing trading stocks. See, Jerry, this is what happens when you build a foundation, okay? When you build that foundation, right, and you have something you're already standing on, you build into what you want to do next. And maybe it's not day trading, maybe it's swing trading, maybe it's position trading, maybe it's something along those lines or something else entirely. But when you have your foundation built and you're grounded and you're not worried about the future, you're set, you've got you've got something you can already stand on. When you can stand on something, you have something to build on. All right. One of the things that I am noticing that I am doing when I come in here and I go live, one of the things that I need to work on and fix. Individuals are like, well, I don't know how to read order flow. So I come in here and I'm like, okay, beautiful. It's time for me to trade. Let me go ahead and read the order flow, right? We're coming in here into the high volume. We're rotating possibly back into this whole area right here, waiting to see if buyers or sellers are going to get aggressive in those areas. We come back up here, we're holding this with buyers, we're coming back in, we're facilitating some trade up in here, but not a lot of buyers are coming back in. So we're coming right back down to where the buyers once held as support to see if they come back in again. They sure do. Now price action's coming up. Expect price action to move above the open if the buyers are really strong in the market. Watch Delta. See how Delta's coming up? All right. As Delta's coming up, what's happening? Price action's moving up. Market orders are coming in through here. We're supported by buyers at the moment. Strong Delta coming in, enough for buyers. Expect price action to break the open. If buyers are strong, we're going to break the open. We're going to see the high break pretty quickly. See the Delta coming back in again? Right? Sellers are trying to defend this area, but not off of market orders, off of limits. What moves the market? Market orders, not limit orders. See, we got past the open and look, boom. And as soon as we got past the open, we traded there just for a second, and then price action turned around, broke the high, and came through, and it didn't take a lot of time for that to happen. That's reading order flow. Here's the problem when I do that when I'm trying to trade live. I spend my time doing that to teach people a way of reading order flow, and I lose track of my longer time frame charts. And the moment you lose track of your higher time frame charts, you get solely focused in the short term. And when you're focused in the short term, you miss the forest. And it's the forest that's important, not a single tree. That's one of the problems I'm having with my trading. The first 15 minutes high at the open when retested, later it collapsed. Yes, I can't lock in. I can't lock in right now. You have a Discord or another time you're on this. Excuse me, I'm sorry. That was terrible. I sure do. Here, let me get you the Discord real quick. I have Discord. It's all free. Don't think that, I'm like, oh yeah, here's Discord, and then you come in and you're like, oh wow, it's like $100 a month. Yeah, no, we're not doing that. Let me get you, where is it? Here it is. So this is Discord here. And then I'm live every morning where I trade live 10 to 11 a.m. And then I'm back on again around 3 p.m. Eastern, New York time, Monday through Friday for practice. And then I'm on the weekends as well, doing more practice too. That's what it takes to be consistent. We're no different than professional athletes. And professional athletes put at least that much time in practice as well. So thank you so much for coming in. Premium, I really appreciate you. But there's a Discord. Come on in. I have training videos and stuff like that. All sorts of stuff coming here real soon. That's one of the reasons why I'm working on all of this as well. Trying to get it all set up. Realizing what it is that I'm doing that's keeping me from running this the way that I want to. And then coming back in, making the adjustments, practicing those adjustments and see if they help. and keep doing that until you find a path that does work, and then you just start following the path. All right, let's get into this. So what am I looking for in the context of my plan in this particular day when we're working on 23rd of July at 9:32 a.m. Okay, so that's the day we're going to be trading. It's the same one I was trading last night. Yes, I kind of have an idea of what price is doing. That doesn't matter at this point in time. Okay, because if I get focused in on my short-term charts, all bets are off. All right, I've got to be able to read everything that's going on. So what's happening in current market condition? Price action's been trading in value since about June 2nd. Okay, so we're not in a trend to the upside anymore. We are absolutely in value, and we're coming in and we're testing the lows of that value area. What happens when we test the lows of the value area? I need to figure out more real estate. When we're testing the lows of our area of value, okay, we should be anticipating buyers to step into the market. Why are we anticipating buyers to step into the market? Because price action is rotational. We're not trending, so we shouldn't expect much more than range extensions to the downside and price action to revert back to the mean. What's the mean? VPOC, volume point of control. It's where the most volume has been traded within this range. Why are we expecting it to revert back to the mean? Because we're not trending. And if we're not trending, price action is going to be in a range looking for heavy participants either to the long side or the downside. And if sellers aren't willing to extend the range and start a trend to the downside, that means that there's not enough strong sellers around the lows to start a trend. So what is price going to do? It's going to revert back into the mean, into unfair highs, looking for sellers that could be aggressive in the markets that could possibly move price back down into a possible trend. And then if they're not willing to move into a trend here, are buyers willing to move into a trend to the upside? And if the answer is no, it's going to rotate again. That's how you create rotational markets, okay? You got to start looking at the markets as an auction, not as price, not as anything else, as an auction, because price is nothing more than the result of the auction. What's the auction? Participants, buyers and sellers. And if buyers and sellers are at equilibrium, price is always going to be a result of a flat market. It's never going to move. What makes markets move? When one side of the participants gets more aggressive than the other side. So if buyers get more aggressive, it changes the equilibrium and it moves it up. If sellers are stronger, it breaks the equilibrium and price goes down. Okay, and price continues to go up and down in that equilibrium until one area of the participants move to one side and say, okay, we're just going to move directionally here. And that's where you start seeing other time frames coming in. That's where you can start seeing what people call smart money, start pumping money or taking money out of the markets, and markets start to move directionally. But markets don't usually move directionally. They trade in the ranges. Why? Because participants don't jump in to the market. The big players don't jump into the market at random places. They jump into the market in meaningful places. Okay, so when price action is rotational, we're really not trading a meaning. So expect rotation, not direction. And if we can pick up the rotations, now we can trade through the rotation itself, buying the lows, selling the highs, buying the lows, because we can anticipate a rotational auction, not market, auction. Find the area where buyers and sellers battle it out is key. Yes, exactly. And where are buyers and sellers, battling it out? Well, around VPOC. That's where the real battle is. How do we know? Because the market's rotational. Buyers, sellers, buyers, sellers, sellers, buyers. Okay? And price action's rotating through this area here. What I like to do is find where sellers have rejected. So if we look at volume and say 70% of all volume traded between these two areas here, okay? What we have is a section of grayed out above us and a section of grayed out below us. What that's basically saying is 70% of volume traded through here, 30% of volume traded in the gray areas. Now, it's not going to be a split 15-15, okay? But as you can tell, more buyers are willing to buy into these highs, or more positions, even sellers, are coming in off of these highs. More participations happening on the highs than the down. This is one of the reasons why up to this point in time, I haven't looked at the market really wanting to drop, because we still have more participants off of the highs up here. But if we're sellers up here and the participants are heavily sellers and they're holding into their positions, right? That's where down here we could eventually see the lows break. But until that happens, what does the market do for rotation? If we come up into this area, rotation isn't staying here. Rotation is coming back down through the range. And if we're down here in the lows, rotation is price action coming back up again. So unfair lows, look for potential longs. Unfair highs, look for potential shorts until the market starts moving directionally and you trade the direction. All right. That's the key in terms of volume profiling. And then for Vito's portion of what he said, if find the areas where buyers and sellers battle it out is key. Yes. So these are the key areas of looking for price action to move directionally from these areas. And then you use higher time frame charts to, well, and this is a daily perspective, so not higher time frames, but you go down into the other time frames of your charts to find key areas where the buyers and sellers battled it out. And what do those happen? On your very low time frames and your high volume. That's where the battling actually took place. And when that battling takes place in an area of a longer term that's of interest to you, now you're matching the short-term battle with a long-term perspective. Now you've got key areas and key zones with key reasons to be entering the market. Vito, what do you think? Did I about sum that up correctly, or would you adjust that in any way? Atomic Trading, welcome. Thank you. I am back. Yes, of course I'm going to be back. I will get frustrated at times. I will turn around and be like, you know what, this really sucks. But it's because I'm having a result and I don't like the result in that moment. My program turns on and it's like, right? But I always come back off of that. I refocus on my intention, what it is that I want to do. And then I come back in here with that renewed sense of intention, focus, bring that focus into the present moment, and we're going to make this happen. That's how you continue to walk into what it is that you want to do. When you get results that you don't like and then you're right and you quit, well, the program is leading you at that point in time, not your intention. So yeah, I'm always going to be back. Thank you so much for sharing the live. I truly appreciate you, Atomic Trading. Thank you. And Vito agreed with me on what I was talking about there in terms of matching your key areas with the higher time frame framework of where you're anticipating participants to enter the market. Then you see areas in the short term where participants did enter the market. And when you get back into those areas, you anticipate those same participants to get back into the market again within that area. Maybe not the same direction, but you are looking at them coming back in. And the key is to understand the auction and where you're at, understand market condition. All right. The market condition gives you direction, not your areas. So if you're in value, you should anticipate the market's going to continue to trade in value. Do not assume it's going to start to trend. Do exactly what it's telling you it's been doing, because the market likes patterns of repetition, not change. All right. If the market's trending, don't try to turn around and trade value and look for unfair highs and try to short an uptrend. You're going to get killed because you're going against the trend. So stop trying to short unfair lows and look for reasons of participants in those areas to go back into trend continuation. All right. So you have to understand market condition. And there's three different market conditions. It can trend up, trend down, and it can move sideways, and balance and value. Sideways is always balance and value. When you're talking about other traders like, oh yeah, the chop just killed me today, what they're saying is they're trading around balance and they didn't know how to do it. All right. That's what they're saying. Secret, how's it going? It's good to see you. Unk Trades, spitting facts. Thanks, Atomic Trade. I appreciate you. So that's what we're looking at in the context of the three market conditions. Now, the three market conditions exist, but then there's something else that exists within, in between each of those market conditions. So in other words, to go from an uptrend to a downtrend to balance, there's something that always happens within those conditions. And I call it a market shift, okay? Because this is how this works, right? When you're in a trend always pulls back, eventually pulls back. Well, when you pull back in a trend, what do you create? Balance. And you're not going to see that balance in your longer time frame charts. You're going to see that balance on the shorter time frame charts. So when you see that balance start to come in, that balance started based off of a bar that we can call a market shift. The market shifted to go from the trend to balance. The market's going to shift to go from balance to trend. The market's going to shift from balance area to balance area. Because if an area breaks out of balance, it's trending on one time frame, but still in balance of another time frame. The market shift is the important key bar to understand in order to be able to realize when a market shift can occur within your three market conditions. I give you an example of a market shift bar. I mark market shifts bar by creating custom profiles. Every single time I get a market shift bar in my 30-minute chart, I put a new profile up. What's a market shift bar? The bar that closes above or below the prior range. When you get a bar that closes above or below your prior range, something interesting is happening and it's occurring. It's a market shift. And that key bar, three things can happen. The market can move into a sideways tight trend. It can move into a trending market condition and the direction of the breakout, or three, it can move back into current new value or prior value. All right. So those are the three things it can do off of the market shift. When you can recognize a market shift bar, you can recognize a possible shift in climate and condition. And then depending on what it does after that, you know what condition you're trading. Are you back in value? Are you trending? Or are you consolidating and you really want to stay out until you break the range to know if you're trending or in balance? Very important to understand market structure. Exactly, Vito. Yes. And that's what we're doing here is we're talking about market structure, how to understand your market structure. And I always start with market structure, my highest time frame. And that's the Globex time frame. What's Globex? Globex is an UNC word, right, for all sessions. So Asia, London, US session, all rolled up into one in a daily time frame. I can't get much bigger than that. I could go to weekly and monthly if I wanted to, but that just starts adding in more analysis I don't need because I'm not doing the swing and position trading. I'm doing more of scalp and day trades. So I don't have to go above the daily, but the daily structure of all sessions gives me enough data to be able to say, this is the market condition that we're in. Some traders out there are like, oh, well, we're in a down market right now. We're this and we're that. No, we're not. We are in balance in a higher time frame trend to the upside. So the price action is imbalanced to the upside. Price action on the daily chart is imbalanced to the upside, and we're currently trading in the range of balance within an imbalanced higher market condition. That's it. That's all we're doing. ETH, yeah, exactly, Atomic. Yes, ETH. Absolutely. All right. Because we want to know what all participants are doing, Not just what they're doing in the US session, not just what they're doing in the Asian or what they're doing in the London. We want to know what all participants are doing in all time frames, okay? In all sessions. We want to know what all the participants are doing, not just one singular group, all right? So in that context, we're trading in an uptrend in a condition of balance, value, range, within the overall condition of a trending higher market. That's our condition. So in other words, we're trading in balance. The market could break out to the upside and continue the trend to the upside. The market could shift from balance to downtrend, but we're going to have to see a shift. Now, bring one other thing into context. Markets usually tend to trend down faster than they go up. Market's ready to drop and it just drops. The market shift to the downside is going to be quick, and you're going to have to be on top of it if you want to hit that shift. But when a market breaks out to the upside, it tests and retests a little bit. What's the difference? Because participants are really checking to see, are the other time frame players or other participants going with me? Okay, where at the lows, when it's ready to drop, it drops because there's no buyers left, and it just tanks quickly. Those are your differences in your shift. Your shift is going to be much faster, less subtle in your downtrend, and it's going to be much more pronounced in your uptrends. Honestly, if you're day trading, you should only be using pit charts. Today they are called RTH. Okay, beautiful. See, this is Vito talking from his experience, right? He's telling me that I'm wrong, and I might absolutely 100% be. I'm not going to argue with him because he has a hell of a lot more experience than me. So what am I going to do then? If he's saying that, honestly, if you're day trading, you should only be using pit charts today, they are called RTH. So you shut off the ETH and you bring your RTH charts up. See? When I recognize guidance that's of a higher authority than my own, I listen. So here's the trend, right? The trend comes up and we come down into this area of balance, or this area down here, right? We don't know if this is a pullback. We don't know if this is going to turn into balance. Where is your market shift at? Here, this high, right up here, right? Coming up, what does it do? It comes down in and it tests these lows right in here, right? And then this bar turns around, breaks through this whole range. This is my market shift bar right here. This is my market shift. And so this is where I start building my profile. But this bar is testing the highs in a trend, okay? So I'm going to add one more bar to my profile, which is this bar right here. This is my key bar, but I want to add, because it broke way down, closed below this whole upper range here. But I want to be able to pick up this high up in here as possible resistance to the market, because I'm anticipating this high to be tested again. This is the bar right below the high, so I'm going to start using this to index the rest of the bars within this particular range. Because at this point in time, as it's coming down, I don't know if this is imbalance. I don't know if this is going to be a trend. It's going to be something. I don't know. Is this just a pullback and we're going to break out of the highs? I have no idea. So what I'm doing is using the market shift and saying, okay, what I want to do is bring this into context and let the market tell me what it's doing. Is it going to continue the trend, or is it going to move into balance? When do I know when it moves into balance? I'm about ready to show you. Price action is coming through here, right? Coming through, going back up again, going up to test the highs. And where does it go? Into your unfair highs, up here, above value. Okay, we could still be trending up here. We don't know what's going to happen. When price action comes back down through value area high in here, now you've got your area of balance. All right, now you have your area of balance, but your area of balance is not confirmed yet. What makes the area of balance confirmed? When you come in and you test value area low. When you get into value area low here on this day, on July 17th, everybody and their brother should have known in the trading world that we're now in a balanced market condition. Does that mean you can't trade between June 4th and July 17th? Absolutely not. It just means that you're trading in a market condition that's not fully developed yet. And if it's not fully developed, you should be looking at it as a possible continuation to the trend to the upside. So let me answer some questions here. Atomic Trading, what charting software are you using? Deep Charts. Vito, the RTH charts show the gaps, study gap theory to trade them properly. And here's your gaps right here, right? So an example, right? A gap. So you have this gap down to the market condition. Price action comes down into value area lows, what should be expecting the gap to possibly be tested. Price action comes up, starts to test the gap, starts moving into the gap, and where do we go? To the high volume of the gap itself. What is that? That's possible rejection from the gap coming off of already value area high. What should you anticipate the market do at that point in time? Possibly reverse. And that reversal is what causes us to come back down into value area low and puts us into a balanced market condition. Would you change anything that I just said there, Vito? Am I giving out too much information? Yeah. Vito and I are going to work together. We're going to turn around and trade and change this whole trading dynamic that's happening on social media. Vito, nope, all good. Thank you. I appreciate that. Vito, seriously, I can never express to you enough how much appreciation I have for you and your expertise and your life experience, and the fact that you're here on a Saturday morning coming in and coaching some rando on social media that's trying to help traders develop, and you're using that opportunity to develop me as well. So thank you, truly. Good. Look, another gap here, right? Where does price action go to? Doesn't quite get there, but it moves right back into VPOC area of the bar that started the gap. And what do we have here? A gap. This gap here, VPOC. This gap here, as it came back down through, again, the higher volume area of this area. And it happens over and over and over again. This bar here, opened down here, right? Came down, tested this area first, and then came up and filled the gap. My goal is to prove to everyone is that internet is lying to everyone. Exactly. No, the internet's absolutely lying to everybody. The prop firms are absolutely lying to everybody. The the talking heads in the financial world are lying to everybody. Okay, Vito, here's something for you. You may have a an idea on this. I don't know if it's still true, but I heard, prior to all the social media and those type of things, that the players on Wall Street and the top CEOs of companies and those type of things used to use the Wall Street Journal as code to speak to one another. They would say something and it would be like a signal to everybody else, but nobody else in the world would actually be able to figure it out, because it's like it's almost like the secret sauce in the language that they used. Did you ever hear anything about like that when you were in the floor, in the pits? There's some truth to that. Yeah. Yeah. I'm not saying that that's the actual truth, right? But yeah. See, I know a few things, not a lot, but a few. But I'm also noticing too that the older I get, the more gray hair I get, the more I realize that I don't know anything. The only thing that I know is what I think I know. And new information can come in at any given time and change what I think I know. As long as I'm open to the new information. If I'm closed off to it, then no, then I can only know what it is that I think I know, and then I'm stuck. I can't move forward in life. Most inside information was done at Bradley's Bar off of Vesey Street. Was that before or after the fistfights? Well, it's just like the Central Bank of the United States was created from J.P. Morgan with 13, 14 people in his office in Jekyll Island, and he locked them in there for like what 3 days for a whole weekend until they created the foundation of the central bank. That was in what 1914. So what's created the whole interest rate things and all of that stuff. You can thank J.P. Morgan for all of that. All right, so let's get into this. Now that we have our information here, right, and this gap little thing going on here, right, we can turn around and say, okay, we got this gap, anticipate price action to possibly come back up here into this area, possibly reject from this area, and continue back down into the direction of the gap, or price action can find buyers in this area and move us back up into value area high. Okay, so we have this gap in here currently. So what do we do with this information? We turn around and we take it into a shorter time frame chart. And the first shorter time frame chart that I put into this equation is the 30-minute. I love my 30-minute chart. Now, guys, hold on a second, okay, before you argue with me about a 30-minute chart, okay? There's no holy grail in time frames, all right? All a time frame is a lens on a camera. That's it. And you need to zoom in and you need to zoom out. And what are you zooming in on, zooming out on? Whatever is important to you. If I have an area of balance here behind me and I want to see that area of balance and I can't see it here within this chart, okay, then I need to move my time frame up in order for me to be able to get all of the information I want in the real estate that I have. And if you can look at time frames, 30-minute, 60-minute, 2 hour, 1 hour, 4 hours, in that context, it will really help. Now, Vito taught me something very important though as well. All right, 10 o'clock, you can see the 10 o'clock bar in the US session. So the first bar after the first 30 minutes, which a lot of people will call that initial balance, right? That's you can see that clearly off of a 4-hour chart. So a 4-hour chart can help you get clarity. A 2-hour chart breaks that down into half, right? And so now you're seeing different segments of time, which can absolutely be helpful in the context. Okay. That will absolutely be helpful, all right? But when it comes to actual time frames and looking at them for what they really are, you're just using them in the context of a lens, like on a camera. You're going in and out. You're doing the same thing, though, in the context of like your 4 hour, your 2 hours, and your 1 hours, right? Because it's just grouping together the bars to see what they did holistically. And then you can see where it closed. Did it close at the bottom 1/3, the high of the 1/3? Did it close as a doji? How did it close? What is a doji telling you? That there's kind of indecisions between buyers and sellers. Nobody was really in control of the bar. At the bar closes in the top 1/3 or at the high of an up bar, buyers were in control of the market at the close of that bar. What do you expect to have happen around the open of the next time frame? That the buyers, you're seeing if the buyers are still aggressive around that high, and if they reject off of that high, what would you expect? For price action to come back down through the close of the previous bar. This is why time frames can be important, not because it's a holy grail. It's a 1 hour and a 5 minute, and the 5 minute extends the range but doesn't close. And you can use all that information if you want, but you're only using price. You're not using participants. You're not using volume. You're not reading the tea leaves within price. What you're saying is, this is what I'm reading, this is what I think is true. And the moment you do that, the market doesn't care what you think, and it doesn't care what is true. And to use Vito's words, the gods that you pray to are not the same gods that the markets listen to. So when you're sitting here hoping and praying that the market's going to go in your direction, right? You're praying to the wrong gods, because the markets are only going to respond to the gods that they follow. And what is the gods that they follow? The participants. And if you're not following the participants, you're praying and hoping and wishing that the market's going to move in your direction. You have no idea what it's going to do. And that's why you're sitting here praying, because you don't know what's going to happen. We're here to change that. And so in this context, right, we created a close below the previous range. I still have the previous range here, right? But the market still closed below that previous range. So we have this range that developed in here. So if I go into this range, where's my areas that I deem important based off of this information? Price action's rotational. It's rotational from value area low to value area high. Okay, that's where price action's rotational from. This is coming in, this line here is coming in from the unfair lows, kind of this low volume area off of the daily perspective. It was much more pronounced on the end of the ETH instead of the RTH, but it's still there. We'll take it off for a second so we can see this a little bit clearer. I'm sorry, we have people talking to me, and I'm ignoring people, and I don't want anybody to feel like they're ignored. I will watch your previous live video to learn more. Goodbye, Secret. Thank you so much. I will. I truly appreciate you. Goodbye. And then waving. Hi, Tony. Are you interested in considering news events at 8:30 or 10:30, etc. on practical day practice sessions? So this is the way. I'm kind of torn on news. Maybe Vito can help us with this a little bit as well. And this is why I'm torn on news, because sometimes the news can absolutely just have a knee-jerk reaction to go the opposite direction of value. It can happen. But what I notice, though, more often than not, if I'm in a position and I'm correctly positioned in the market between participants and areas, a lot of times the news will just drive price in my direction. And now I have volatility going in my direction. Now, I'm not telling anybody to trade through news. Okay, I'm just telling people from my own personal experience, that's what's happened before. Vito, you want to chime in on that and help me? Guide me a little bit in the context of what you would do in the context of news, or what you did in the pits, or anything along those lines. Vito, you're oh God, this is so awesome. Never in my life would have I ever been able to say, oh yeah, Tony, you're going to be talking to individuals about trading, and there's going to be an old pit, a former pit trader there, talking with you to help you hone in on the language and the more of the truth of what's going on in the words that you're saying. I would never have thought that this was even would ever be remotely a possibility, and it's such a joy to experience. Um, let's see here. So these are the areas, okay? If we're in value in here, right? And price action is moving from value area low to value area high, value area high to value area low, okay? You're anticipating price action to continue the cycle. Well, in that cycle, there's areas of range and there's areas of rejection. Okay. And what we're trying to do is we're trying to say, okay, the market's going to range and we should anticipate range somewhere within the orange area where most volumes traded. What causes most volume to trade around price? The amount of time that it's spent there. So when price action's in a range or within the range of the majority of volume, okay, then what does that mean? That means that we can anticipate some ranged price action to spend time in particular areas. But when price action gets outside of that range, what happens? It goes into areas where it didn't spend much time. What do we expect to have happen in those areas? Rejection. For price not to trade around those areas very much. Now, we did get some price action through here that did trade through the area, but look, we only had 3 bars here come into this whole area of low volume. Okay. And then we traded back out of it again, turned into a range beneath it, and then we moved lower. Now, what happened here? Price action didn't even make it back down into value area low. So we're no longer rotational in this market at this point in time. We've created a higher high, higher highs, okay, and higher lows, lower lows here, but still higher lows over context, and we didn't make it back into value area low. What do we do in those situations? Possibly anticipate a breakout to the upside, okay? A breakout is up through here, which is a market shift bar that could move price into a trend to the upside, move it into sideways price action like we see here, or, and this is exactly what happened over here, right? We have this range in here, the range is developed, and we get a close above. What happens when we get that close above? That's your market shift bar. You should already be putting in a custom volume profile on this bar through this range. And then what happens? We come up, we do break the highs there, but we go into sideways consolidation action until we come back and we test back through this range again. We come back up into developing value area high here. Now we're in a rotational market until we come right back down and we close below the market shift bar again, moving us back into the lower area value. This is why the market shift is so important. Okay, so now we come up, make the higher lows within the market, right? But look, lower highs. We didn't break the highs. So are we going to be trending? At least from this context, no, because we haven't even created the market shift to begin with by getting a close above this range. What does price action do? Comes down, back into the low of this bar, pops back up to test the highs, can't even get above this range, rejects right out of the low volume node, and moves right back down into prior range of value. Then what happens? Price action comes in, creates a rejection bar in the 30-minute right in the area that we're looking for. And that's the end of the story. Because the market closed, and now we have to wait for Sunday night. So there it is. That's the full market structure of where we're at right now. And that's how to read the 30-minute price in the connection in connection with the areas that you're looking for. Okay. Now, Vito, you individuals in the pits were quite elaborate. I'm really liking this. Real quick, so those yellow lines you have drawn are your volume peaks along your volume profile. Beautiful. Great question. Great question. Okay. I love this. The lines that I drew are the low volume areas, the lowest volume areas underneath value, the lowest volume area underneath or above value, all right? The low volume, not the high volume within value, the low volume. Why do we want to see the low volume? Because price action didn't spend a lot of time there. What does it look like? That's your rejection. Okay, traded through, came back through, rejected off of this upper level, didn't even get back into this level, rejected, came into this level here, rejected. And why? Because we don't expect price action to spend a lot of time in the low volume because it didn't spend a lot of time there before. Now, what will happen is it will, at times, like down here, you had low volume in here, okay? But over time, it can spend time in here and those no longer become the low volume. But now you're looking for your range extensions to happen within value and your areas come lower. And sure enough, you start getting your range extensions and your areas of support are now lower. Does that help answer your question, Budget? That was a great question. I love that. Thank you. This was a low volume area I was looking at trading before as well. That hit this and it hit this. But when this happened here, you get the higher volume in here and you no longer have that area. And then your value area shifts back up to the upside, right? And then price action comes up through that, creates this high volume area above us. And we're looking for a potential breakout of that to move higher, test back into this area to move us into a trend. But it didn't happen and moved us back into low volume. And now a trend on the 30-minute is only going to be in value of your longer term. Okay? So a 1 minute can move into a trend. Your 5 minute is still in value. Your 5 minute can move into a trend from your 1 minute trend that can move a 10, a 15, 30 minute into trend, but you're still only in value on a 60, 120, 240, 480, whatever time frame you're looking for, a 1440, which would be a daily of all of your sessions. You love this? Thank you. Thank you, Budget. I appreciate that. I appreciate the positive feedback there. Thank you. And so, yeah, that's what we're looking at. Now, if we turn around and take this logic, okay, and bring it back to 932, let's go ahead and put us at 830. Let's put us at 830 on July 23rd. Okay, so everybody sees, all right, what I'm doing. July 23rd at 8:30 in the morning. All right, we're going to hit reset. Now let's see if I can do this without getting irritated. And what irritates me is when I start focusing too much on my short-term chart, because individuals are like, well, I don't know how to read order flow. And so I'm trying to teach them how to read order flow. I got to stop doing that. So Tony, this session here, intentionally, you are not going to teach order flow in this example. You can create other videos to help people understand order flow. For now, what we're going to do is we're going to trade our higher time frame charts. And in trading the higher time frame charts, I'm going to be watching those charts. My eyes are going to be moving from screen to screen, from chart to chart. And I'm going to enter off of those charts, not because I'm focused on the short-term chart. Now, see, what I just did there is I know that I have a habit, a habitual pattern of being locked in to my short-term chart. So before I come in and trade, I acknowledge that truth. I accept that truth. I'm not resisting it. I'm not saying, I don't do that. I'm not going to do that today. Are you kidding me? I'm not going to make the same mistake again. No, I acknowledge that it's a habit inside of me. I accept that habit as truth. I intentionally decide I'm going to do something else. I talk to myself about the plan that I'm going to do. I'm going to speak it to the outside. Why? Because words have meaning. What's the meaning of words? Words have the meaning to manipulate the body. Okay? Doesn't mean it's going to manipulate the body. Words have meaning enough that can trigger the body to be manipulated in a particular way. If intention isn't manipulating the body, your habits are. So if I don't talk to myself and build that plan of what it is that I am going to do after I acknowledge and accept what's keeping me from getting the results I want, then if I don't, and then I speak the words of what I'm going to do instead, if I don't keep the intention alive, I'm going to revert back to those old habits and I'm going to be locked into my short-term charts again, and I'm going to make the same mistakes I made yesterday. All right. Budget Daddy, same habit here. Good reminder. Yeah. And so this is the Human Performance Lab, right? And so what we're doing is we're not just talking about just trading and how to trade. What we're doing is we're also putting it into a psychological concept of it as well, not trading psychology, habitual psychology. What do we do habitually? And then how do we break the habits? And how do we bring that into the present moment, here and now, with a sense of urgency so that our intentional focus can start manipulating the body instead of our habitual processes? And at the same time we're practicing our trading, we practice that art as well. And if we're practicing it here, we can practice it in other areas of our life, aligning our life into our full intention rather than just a part of it. 2307 is very interesting. New York session. Would love to hear your PMA. Yeah. And look at trading session. Most of the anticipate move has already happened at Globex session. Ram, you're 100% correct. This is why I love this day. Okay. On July 3rd, I'm going to show you guys here. Let's be fully authentic in absolutely everything. Okay. Some of you have been here for a little bit. Some of you are brand new. I want to absolutely show you guys exactly what it is that I am doing. I started this project 4 weeks ago and I was going to just trade cash. Well, talking to individuals online and those type of things, most everybody is doing everything in the context of their the prop accounts. So I came off of cash and I went prop just to see if it can be done, to be honest with you, right? But if I'm going to help develop individuals into trading, I need to develop it into the rules and the things that they're doing within their trading. And so if you can't use cash and you have to use the props, how can I help demonstrate to use to set things up properly for prop when I'm trading differently in cash? So I'm trying to keep everything aligned. So this is what happened, okay? This is where I'm at right now in this process. The first week cash, came off cash, tried to go into props and failed miserably. So I went to sim and I brought everything back into sim. Now, granted, guys, I started trading in 98. I stopped trading in December of 2019. And then I didn't start trading again until June of this year. I didn't get charts until May of this year. Okay. So this is all brand new for me again. Did the same thing in my calls for my students. Atomic, beautiful, beautiful. Thank you for that feedback. I appreciate it. See, I'm all new to this. And so when you guys talk to me about that stuff, it really helps me because when you're starting to do something new, you don't know what you're doing, right? And so you're giving me confirmation of my ideas and they've worked for you as well. So I really appreciate that feedback. And so this is the first week I've actually been trading live in a prop account. Okay. Now the first 2 days of this, can everybody see this? Yeah. So the first 2 days, I was expecting chop in the markets. Okay. So I didn't do a lot of trading. I was just kind of doing whatever. This day here, oh my God, this day, I was trading minis because I don't like trade micros. I really don't. 50 cents just kind of hurts me. It's like, I feel like I'm on like a penny stocks, right? And I took an expensive 1350, which was too wide to be able to do in a prop account. And so I came off of live and I went sim, and my next trade was a $1,600 revenue trade. And I did that on sim. And you can watch this day and watch that develop and see that happen because I did that real time. Okay. But it still took the $1,200 hit that day. The next day, I didn't trade live. I traded on my own. And I was like, okay, I'm going to come in here and trade. Well, look, 53 trades. I only traded for an hour. Sounds like a lot, I know, but I was scaling in, scaling out. I didn't have an expense trade this day. I was just scalping, doing what I do. Then the next day, I turn in, and I'm somebody. I was like, okay, guys, I go to my community on Discord. I'm like, okay, guys, I'm not going to be trading live. And then I had a few people come in and say, oh, well, we really hope you would. This really helps us. And, okay, fine, I'll try it again. And that's what happened on that particular day. This was Friday. I was only up $117. I was down in the session, actually. I had a $600 or $6 break-even trade. Then I was down $37. And as soon as I ended the stream, like 2 minutes later, I just saw this. I just saw it. Guys, sometimes in the markets, you have a feel, you just see something. And I went short and I picked up $150, $160 in like 10 seconds, right? And I ended up the day up 117.66. Okay. But I was trading in front of everybody again. And I don't do as well when I'm doing that. So I'm going to be replaying Friday again today as well of the 23rd. But this is what I did on the 23rd. Now, yesterday, I come in here and I practice the 23rd. Oh my God. The first 15, 20 minutes of me trading, I'm down $1,200. And I'm like, how can I be down $1,200? Because I was trying to trade the day through a day trade sense instead of scalping. So I turned around and got off stream. I scalped it. And in the first hour, I was up 2,600. So I did better the second time than I did the first time at the live. But that kind of makes sense because your mind is going to remember some of the patterns and stuff that happened. Okay. Most of the anticipated move was already happened in Globex section. Okay, we already talked about that. So this is the results so far of my first week of trading. I'm in a select 150,000 in Tradeify, and I have to make $9,000. I have $4,500 of max risk, and now I'm back up into the profitability, and so I still have the full $4,500 beneath me because it's not a high watermark drawdown. So that's where we're at currently. And so the 23rd, I did really well, and a lot of people struggle with the 23rd, but I did the 23rd really well because, well, guess what? I scalped. I did a lot of scalping, and that's what we're going to do here. All right. You guys ready? Who's ready to get into this? Who wants to see some live trading on the 23rd? Anybody? Anybody still here? Did I lose everybody? Peter, thank you so much for the subscription. I really appreciate you. You guys, I truly appreciate all the support that you guys absolutely give me in this community. I absolutely love it, and I don't call things out because I don't have all the stuff, set up for the follows and all the alerts and stuff like that. It's not because I don't care. It's one, I don't necessarily want the distraction for anybody, including myself, as we're going through the demonstrations. But I do want to let everybody know that I truly appreciate all the support, the likes, the follows, the hearts, the everything, just all the stuff that helps when participants do those things for the algorithm to pick up, and this information goes out to other people. All right. So thank you so much for all of you for all of that support. Here, just have you in while I'm working. That's amazing, Atomic. Thank you so much for watching while you're working. I do. I truly appreciate that. Okay, here we go. Here we go. We're gonna hit play. Well, not yet because we're only at 8:30. Let's go ahead and move this to 9:30. So 9:30, everybody see that? Beautiful. Let's hit set. And this is, I'm showing you too, why I use deep charts. It's the replay function. That, and they don't have a lot of indicators. And you notice I don't have any indicators on my charts. I don't use fibs. I don't use moving averages. I don't even want a moving average on my chart. And it's just, to me, it's even on the longer terms. I don't need a 50. I don't need 100. I don't need more information. I need less, so I can trust the information that I'm using. And in that trust, if the theory breaks down at all, I can come in, work on the theory, and test it in the laboratory until I get myself right back to where I want to be again. So now we're going to hit play. And now we have live markets going. Not because it's live trading, right? This is a replay, but live data that we're replaying. So we're waiting for the first 15 minutes, and immediately we come down and we come right down into our area. And what do we get? Rejection. Okay. We immediately get rejection into the market off of that area below value area low. What does price do? It comes up, it tests back into the higher value areas of this range in here. Okay. And it comes right back and tests lows again, rejects lows again. If buyers are strong, we're going to get back into this area. If not, we're going to see lower lows. Seeing the lower lows, trading through the area. Rejects in the area. Look at the high volume down here at the low. All right. And you can tell in the histogram, of course, as volume starts to, as we start accumulate volume at higher prices, right, this volume doesn't get as significant. But this high volume here, I'm anticipating this to be tested at some point in time and this low to break, because usually we don't leave a high volume like that at a low. Watch your delta. Delta is important. Make sure you're watching your higher time frames. Already I feel myself getting keyed into the short-term chart. I just noticed that was happening. Why did I notice it was happening? Because I spoke the truth of it before I even started the session. And so now I'm looking at my higher time frame charts, darting my eyes around, looking at everything so I don't get too tunnel vision into my short-term chart. See what happens when you speak the truth of the habit, but then you speak what you're going to do. When you're aware that the habit is triggered, you come back into the markets again. See your delta here, you're going through the open, expect this high to break, expect momentum to happen at the break of this high. We didn't get momentum at the break of the high. We got some rejection up here. Okay, why would I expect momentum? Because of the delta coming into the market, because of the delta that came in here. I'm expecting momentum to come into the market. If I don't see it, I'm seeing rejection. I'm not seeing acceptance. Okay, acceptance of higher prices means that buyers are stepping in. Now they are. See, I didn't say, oh, there's rejection, I'm going short. I'm saying this is what I'm anticipating to see in the market. I'm not seeing it. Now I am. This makes much more sense. We're moving higher. Where would I expect price action to move into? Here in this range. I'm expecting to come in and test this high volume up here. Okay. Why? Because price action came down, came into this low. Where is it probably going to move into? High volume. Where's my high volume at on my short-term chart? Right up here in this area and this range. It's where we spent the most time. And you can see all the developing VPOCs, volume pointed controls, developing all throughout this range, right? You can just see the yellow boxes in the yellow area. That's the area I'm anticipating price action to come back into and test. Does it mean it's going to reject there? No, it means I'm expecting it to test there. I'm also looking at a 60-minute chart. I'm looking at another daily chart. I'm looking at a 30-minute chart. I'm looking at, there's a 5-minute here, and I'm looking at the RTH for the profile chart. Right? These are the charts that I have up in front of me. Unfortunately, on TikTok, you can only see the So So those are all the charts, atomic. So I have a daily, I have a 60 minute. That 60 minute I will transfer over to a 2 hour and 4 hour at times just to get a different perspective, but it's all on the one time frame. And then I have my 2 minute for my entry. I am working on a 1 minute entry criteria over here on the other side, but it looks exactly like this chart does here. It's just 2 minute comparatively to a 1 minute. Then I'm using a 30 minute. I have a 5 minute down here, which I'm just kind of testing and I'm just kind of watching ideas off of. Not that it's anything of particular, but look, this is what all of my charts look like. Okay, there's no indicators, there's no anything else. Okay, nothing crazy on anything other than the same information that we're already looking at. Price action comes up here, continuing to move higher, getting closer to my area. Maddie's 270. I think the same, but I like to see and hear Tony. Damn, you ever have a day off? What's up, cheese? We good in here? Yeah, we're good. We're good, Maddie. No, I don't take days off. Are you kidding me? Absolutely not. I will earn days off when this becomes my lifestyle. When this becomes my lifestyle, and I'm doing this, and this is all I'm doing, and it becomes the foundation of my life, now I've earned the right to have days off, to go to the beach, to just chill and go on vacations. But until then, no. No, 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 no. No, this is what's going to earn the right for me to do those things. I wish I would have done that when I was in my 30s. I didn't. I played when I was in my 30s. I did really, really well in my 30s financially, and I played a lot. And then I went through a divorce and I lost everything. My life was a country music song backwards, right? And I lost my kid in the process too, but that's a different story. I'm not even going into that right now. But I have nothing but love for that situation. It almost killed me. It put me through a depressed state from December of 2019 to August of 2023 when I almost died from blood clots because I wasn't doing anything. And so now I'm bringing myself back up into the intention, but I'm not having days off and I'm not doing anything else until this becomes my life. And then I've earned the right. And so here we're coming into that area of where I drew that line, right? We're still showing acceptance of higher prices. We're not showing any signs of rejection yet. Maddie Ram, this guy be doing the work though. I'm in my 30s, no play here, just a couple of month vacation though. Haven't done vacation in 5 years, working hard. And here's the thing, guys. Let me pause this real quick, okay? Because we're talking about something important here, okay? Live your life. We never know when it's going to end, okay? I think it's hilarious. Call me an unk, right? Call me whatever it is that you want to in that context. You know what? A lot of people in my generation aren't here at 50 years old. They've already gone to their next journey. And I'm still here living life. And I don't take that for granted anymore. When I was young, I'm like, I'm invincible. I'm going to live forever. It's like, whatever. No, I have enough gray hair to know that eventually my life is going to end. And I lived a lot of life. I had a lot of fun. I love life. But I don't want it to be about the material. I don't want it to be about the stuff anymore. I want it to be about intentional. I want it to be fulfilling. I want it to be joyful. And this is what creates that fulfillment for me, is fulfilling my intention through my actions, and let the universe, reality, to create form around that alignment. And that's what brings me joy. And I just want to live in the context of that joy. Maddie, now I'm set up though, chilling with a kid, doing what I want, but with the ability to turn on the PC and pay the bills. Exactly. That's exactly it right there. right, Maddie? You made this the foundation of your life. That's exactly where I want to get back to. This was the foundation of my life before. I want to get back there. A lot of things have changed between 2019 and today in the markets. Things are different, right? But I've only been back in the saddle since June. Just wait. Just wait. I mean, to be honest, I don't think this is terrible results. Only being trading again for a month, 2 months, June, July, month and a half, right? This is my 4th week of streaming. Okay. I feel like I'm doing pretty damn good, right? So we're in this area. We're seeing some acceptance above this area, right? Which is perfect, just fine. This area isn't a place to enter off of. This place is an area to watch. What are the other time frames saying? The 1 hour is coming down hard. We rejected off of the lows in here, okay? But we get back through the open of this current bar in the 1 hour around the 781, we could see a collapse and a move back down into these areas. If we break this area again, because we've already tested it, we're probably going to come down, break this low and test down here into the lower area. All right. If we stay above the 781 area, so the 790, 780 area, right? If we stay above that, we can see price action continue to move higher. So all we're doing right now is waiting to see what happens. What did we just get? We just got to close above this line. Where's the area at? Right over here. We still haven't necessarily closed above this whole area here yet. So we don't even have a market shift yet. And now what are we seeing? Possible rejection coming down through here. Where's the 780 at? Right here. Right there, which is the open of the 1 hour chart. Okay. Watch, okay? Don't short yet. Don't short yet. Why? We don't want to short on this bar. What we want to do is wait for this bar to close, and then we want to see a pullback up into this area. Why up into this area? It's the high volume of this whole rejection move right here. We're probably going to come back and test it. If we enter here, we have a wider stop. If we enter around here, we have a tighter stop. But Tony, you might not get the pullback. Absolutely. If we don't get the pullback, fine, we'll enter off of momentum. Right now, we don't have momentum. We have a reversal. And our reversals, we want to be tight on our stops. Turn 30 and you wake up with back pain out of nowhere, and then you realize that you ain't living forever. I'm in my 30s, married and a kid, and got laid off due to AI hype. So I started learning trading. I see light at the end of the tunnel, confident I will be profitable to pay bills soon. Oh, you guys are awesome. You guys are awesome. I mowed the lawn on Thursday, and I'm in North Carolina or West Virginia, and so there's we have hills here, and I live right on a hill, and so I mow the lawn, and when I mow the lawn, I'm going up the hills, right? I go on my tiptoes so I can do like a calf workout at the whole time that I'm doing it. My calves are so sore right now. Oh my God, they're screaming at me. Not impressed. So here, okay, we're breaking up, right? We still don't have a close above this area. Don't look at this as a breakout, okay? These are all signs of potential rejection coming into the market. Now, if we get rejection through here, where's the high volume area? In here. We're going to want to see market come down, right? Because technically, at this moment, we're in a very short-term uptrend. What makes an uptrend? Higher highs, higher lows. If the trend is going to break, okay, we're going to want to see lower lows, lower highs. So we want to see a lower low, a pullback, lower highs, movement back down again. It's no different than what we're seeing on anything else. We just have to wait to absolutely see it. Where are we at on the 30-minute? We're right into VPOC. What is VPOC? The highest volume. Okay, we're moving directly into the highest volume. Are we going to accept up here and get back up into value area high? Are we going to reject this area, move back into value area lows, testing to see if buyers are still willing to support this market? Damn, sometimes I'm almost good at this. Now we're starting to get the possible close above this area. Buyers are still strong in this market, moving up. Why am I not long? We're only 9:41 in the morning. We got to give this time to establish its range of the morning. But look, we're already coming off of it. No close above yet. If we don't get a close above here, we're not breaking out of the range. This is just an extension of the range. Okay? So we got to wait and see what happens. Now we have a close above the range, a close above this range. What is the market doing? Still too early for us to tell. But right now, we're just continuing to move higher and a higher range into balance. Okay? Right off of low volume nodes, above VPOC right now. If this holds, anticipate price action to come up here. And if it does hold here, we can get into momentum to move higher back up into value area high. We haven't missed anything. This is just not our opportunity yet. This is somebody else's opportunity. Don't trade everybody's opportunities, only trade your own. And if the market's going without you, stop looking at it as it's something you missed. It's merely somebody else's opportunity. You will get yours as long as you don't start chasing other people's opportunities, because that's when you start trading outside of your plan and you mess everything up. $9.43, we're getting close to the point where we can start trading. Not quite, but we're getting close. And I'm probably going to change my trading hours right now to 10 to 11, from 10 to 11 anyhow, and not in this time frame. But we will see. Now we have our area back here. What's going on here? Where are we at? We're back up here into these highs. Where's the next high volume platform? Right up here. Boom. Okay, that's possible resistance in the context of overall value. All right, this is around VPOC. This is above VPOC. So if we get up here and we start rejecting, see about price action coming down, coming back up, and then possibly a short. Okay, but above this area, we should definitely be looking for potential another expansion to the upside. But notice we have not gotten pullbacks. We haven't gotten anything right now. Nada. Zilch. VPOC is at 810, okay? And we're trading nicely now off of the 1 hour chart, because remember that 780 area, 784, 781 is the open of that market. It's not exact. I can put the thing up to put exact. I'm just putting the cursor around the open, and it's around the 784, 75 area. Nice strong move to the upside here. Price action is starting to come off a little bit. Look and see what happens around this high. See how we're getting into the high volume right now? We're getting into the high volume and we're rejecting off of that high volume and coming off of it. Okay? Let's see what happens around this low. See the high volume here? Expect this low to break. And I'm being very, very aware of where my eyes are. And am I getting too granular in what it is that I am doing? Again, higher volume, right? Anticipate the lows to break. Now we're here at VWAP. This is important. VWAP, this is your first band out of VWAP, basically a standard deviation from here, okay? So we have the band here of the first band of VWAP. We haven't even gotten back up into fair value yet. Are we going to hold this band or are we going to trade below it? And if we trade below it, we're coming right back into our area again, look for a possible range extension to the downside. To test the lows. This is a trade in value, okay? In value, this would be going against the 30-minute perspective and the context of a short here. So you would want to be very careful if you were going to do a short in this area, all right? And I would be much more comfortable with a short in this area below VPOC. This would be a test of VPOC, price action trying to move to value area high, find rejection in value to move back into fair lows around 8, below the 810 area. Where are my lines here? Do I have an 810 area in here? Sure enough, right here. This is at 806 below the 810. So if we get a move down through this area right here, I'm going to be looking for a pullback and a reason to go short. If this area holds and we get above this area, we get above VWAP, I'm going to be looking for a continuation play to the upside. And if I'm looking for a continuation play to the upside, I'm going to be looking for 194 as a potential target. Well, 194 from an entry of 29,000, nice little trade. And you turn that into a day trade instead of a scalp, because you're moving in the context of the higher time frame chart. You're above VPOC, you're above VWAP on a shorter time frame chart. Price action's right back here into this area. We're finding some rejection through it. Let's see if we hit rejection or acceptance through this area. Darn it, went the wrong way. Oh my goodness. There. Thank you. And then how much room do we have from here? 799, 680. Oh yeah, we have plenty of room. Plenty of room for potential profits down here. Looking for a breakout of this area and a continuation to the downside. And primarily because the hourly chart is getting back through its open again around 84. Looking for a pullback here. There's the short. Looking for a little bit of a higher pullback here, possibly. The pullback can come up into the 2835 area, okay? So I'm going to want to be kind of careful on this. We're up 200 right now. I'm going to go ahead and lock in about 20 just for a break-even trade. This is a scalp. We're moving against overall value. We're moving back into value area lows, but I'm trading in the context of the 2-minute chart, or the 1 hour chart right now, and directionally in the 1 hour chart. We came up here, we held the high volume in here, and there you go. We're up about 300. I'm going to go ahead and lock in 166, and we're just going to trade the momentum out of this market. 190, we're up about 400. I'm going to go ahead and lock in about 200, right above this right at this value area high. We should probably put it right above value area high because we're anticipating price action to come back and test this area, right? And if so, it could stop us out. If we give it enough room, it doesn't stop us out. And it stops us out, okay, which is fine. So now we're still below the open, right? We're back up here into the high volume area here. We're down bar. Let's go ahead and take another shot to the downside, putting our stop right up here around 222. We've locked in 164 in revenue so far today. Let's see if we can get a continuation play to the downside. This one, I don't like how this is coming in right now. So I'm going to go ahead and take out the expense. And why am I taking an expense there? We're down 16 on the day because I can get in at a better price up here, possibly if we come into this high volume up here. Price action's right back to its open again. I'm going to go ahead and take another shot to the downside, but this time I'm going to move my stop a little bit higher. I'm taking a $388 risk on this, but what I was looking for is a pullback up here into this higher volume range for a potential short, and it didn't give it to me. So I entered back at the open of this bar again. A little bit of an aggressive entry, but I can always get in with another contract or two and raise my entry price if we get back up here into this area. Price action's coming down now. We're going to move into these higher volume areas between these two. We're going to see if we can get the higher volume to come in. Look at our delta coming back into the market here. Price action still moving lower. We're looking for a possibility of price action moving down here into the area around the 685. So I'm going to be a little bit less aggressive in my stop this time and bring this up again because I have that 164 and more revenue I need to be able to produce from this position. IVB is right down here, not a bad area to look for a target. That would be about $820. That would be the revenue that we needed from the original position and getting back the $160 to begin with. So I am going to go ahead though and move my stop down here into this area because I'm not going to allow myself to be up $250, $300 in a position and take an expense trade. It's just not going to happen. And I'm putting my stop right below the lows of these previous bars over here. Why am I putting it over by the previous bars? Because I'm anticipating price action to possibly come up and test those lows in a pullback, but not turn around and break them. What did price action do? Tested back into the area of those lows, did not break them, and breaking lower lows. Price action is moving exactly where I would anticipate. Now I'm anticipating this high not to break. If this high breaks, chances are I can get in a better price. If price action comes back down through the open through rejection of higher prices, then you anticipate price action to come back down through here with a level of momentum because we've already tested where the buyers were. The buyers weren't there. Sellers step back into the market, expects to have more sellers step back into the market after it breaks the open of the bar again. I'm getting too focused on the short-term chart, so I'm moving my eyes. Making sure I don't make the same mistakes again that I did before. Where's price action now? Coming off of value area low. We're coming off of value area low on the 30-minute chart. Take a look. It's right there. Price action came up. Where's my area of entry I would really like to be in here? Right about here. Let's go ahead and put in another round of contracts here. Another shot just in case we get up there. And I'm putting in right below the high volume area. Why am I putting it in right below the high volume area? Because that's the high volume areas where I expect it to test. So if I put it in below, right, price action moves higher through into that area, it's going to fill me. If I put it in someplace here, right, if I put it in someplace above that area or right at that area, we may not get filled. So I'm putting it at the area where I have the most advantageous to get filled. Have the highest probability of getting filled. Now, where can we possibly move back up into? We can move back up here into VWAP, the band above us, right? Which used to be below us, but now it's above us. So we can move up into that area. We're down 236 right now. I'm up $74 on the day so far, so I'm not too worried about this at the moment. I am watching it though. I don't want to take a huge risk on this position, but we have this area up here we can come back and test. And if we move into that area, or even into this area right here, fill this low, what can I do? Add into the position. Now I have my risk set up here. We're risking $592. We have 8 contracts on now instead of 4. Oh, I don't like how price action's moving up like that. I don't like how we did that at all. Yeah, it's going to come up and stop me out. Rude. Okay, so now we're down 520. When I was trading this live, I was not down here at all. So I'm doing something else different right now than I was doing when I was live, but that's okay. So we're right back up here into this higher range of volume again. I'm getting in too late here, but I'm going to go ahead and put in another 548 risk by being up here. And if we come up here into this area, I'm going to be willing to get back into another. No, because I'm already risking 548. I've already taken a $500 hit. I don't want to take a $1,000 hit. We'll just go ahead and hold the position in anticipation of coming back down into value area low. Why value area low? Because we came off of this area here. Okay, we're still looking for price action to rotate back down below value area low here into this range in here. We didn't quite get there. So I'm looking for a continuation play to that downside down here into this area before we really get buyers to step back in again. Why? Because we're holding these areas above us and we're still right here at the open of the hourly chart, and the previous bar on the hourly is way down. okay? And we closed near its low. So I'm just moving directionally in through the hourly chart is all I'm doing. And I'm looking for price action to come right back down here again. Price action is coming back down again. Let's see if we can break the lows in here. Right here. The higher volume is stepping in, anticipating some momentum to come into this market if we turn around and break this low. I'm looking at it coming back down and at least testing here into this area. There's the lows. Do we get the momentum? Not yet. So we could test back up here. There's the momentum. See? There's the momentum of the follow through. Without the momentum, you're anticipating a retest again. With that momentum coming in, you have sellers driving into the market. That tells us now that we're directionally in the right area at the right time. Okay, the momentum is stepping in. The momentum stepping in where we would anticipate the momentum to step in, which is coming in right off of this area again. And the hourly back through its open. Why am I mentioning the hourly? To make sure that I'm acknowledging that my eyes are moving, because my eyes need to be moving and not fixated on these short-term charts. And it's now 9:56 in the morning, and I'm down 520. So rude. That is so rude. Well, you know what? It makes sense. I didn't start trading this day until 10. So, there is that. And we're like 2 minutes away from 10 o'clock. I'm 904 on the position right now. Okay, we have our low in here. Okay, we have the high volume in here. I'm going to move this up here to the 1204 because we have the high volume right here below us in this area. And I'm anticipating price action to come down and test into that area. So I'm not anticipating the initial balance test. I'm anticipating the high volume test into this area below us. And then looking for a possible movement to the upside from this area. And then we have our other area below us as well. So if we get through this area, price action can move through here pretty quickly. Then we start to find some rejection here, possibly trade back down into this range, possibly below, move back, possibly down, or we hold this range here and we're starting to look for long positions. Price action's breaking the highs here a little bit. Coming off some rejection here. The 60 minutes still holding the open, so we're still a down bar in the open of the 60 minute, looking for a range extension. What is happening here on the perspective here? What do we have? A gap. What are we anticipating with the gap? To possibly come up and fill it around the 252 area. Vito, I hope you're here. Thank you. Thank you. Thank you for the lesson. Oh my God. Guys, I'm still completely flabbergasted that not only do I have a former pit trader in my room talking to me and working with me, I have, I don't know, just this whole thing is just absolutely interesting to me. Ram, do I when do you like to take profits or add to your position if trading evals? Okay, so here I'm not adding into my position because we're looking down here, right? If I'm trading this properly, all right, if I'm trading this properly, I will be scalping this area right now. And when we start coming up here into this low here, I should be out of the position and start looking for another entry. Okay. This, though, I'm kind of turning into a day trade. I'm kind of turning into a day trade because I'm looking for something. I'm looking for the markets to come back down into this area after holding in here. We're in a gap. I'm trading in the direction of the 1 hour chart right now. So I'm giving this a lot more room than I normally would. Okay. But we're about ready to get into some heavy scalping market conditions. And then you're really going to be able to see what I'm doing in that context. And I'm going to trade this through 11 and I'm going to try. You'll see. Okay. You'll see. I have an idea of how this day plays out. I don't know when it happens. Okay. But I do know that at some point in time, we break through this level down here. Okay. I know that for a fact. I remember that. I don't know what time, but I do know. But notice I'm not trading in that context, right? I'm putting my target down in here where I'm anticipating the move to end, right? And then when we get down here into the area, you're going to watch and start seeing it cycle. Just because we're in this low here, we have a gap above us that we can continue to move lower. So I'm going to be very cautious on the long positions that I'm taking. We're also trading in the context of the daily chart of the 1 hour chart, right? So there's a lot of things that are happening here behind the curtains of why I'm keeping my target where it's at and not actively trading this at the moment. This is the time where you switch your plan from scalp to day trade. And you can switch your day trade plan to a you can switch your day trade plan to a swing trade and your swing to a position. And if you understand how to enter off of scalps, you can use the same exact entry criteria for all of your plans. A lot of people have different entries criterias for each type of their plan. This way you can have one, you can practice one, you know one, you can get really good at one, and then you utilize your you manage the position on whatever time frames that you're using between your day trade, your swing trade, and your position trading. And down here, there's no real good place for me to have entries again until right down in this area. But that's too tight from where price would be from down here, unless if it's just a small little scalp. I don't want to lose my entry here. I like my entry. I like my entry a lot. If we come up here and we start moving into these higher areas of value, you got to believe that I'm going to be moving my stop to a break even and I'm not going to take an expense on this trade. But for right now, I like how price is behaving here and I'm still moving in the direction of the hourly chart. Hourly did close there, in the bottom 1/3 of the range here recently. Okay. So price action could be moving up here. Okay. And I'm going to be cautious of that. But I like my entry and I'm waiting for the 1 hour chart to retest its new open around the 09. Where's the open of that bar at? Around the 03 1/4. So I'm looking for the 03 1/4 right down in this area to price action to move back down through. We're rejecting the highs here. Now we're accepting the highs. Now I'm not liking this near as much as I did before. We're testing the open of the hourly right now around this price, around 95. Right in here. We get through that, we could see price action come up and test this high. And if we do, I'll be looking for another short up there. And here's the thing too, trading these short-term charts, right? Because Ram, you're absolutely correct in the context of revenue, right? There's nothing saying that you can't be out of this position someplace in here with revenue, and then you're looking for another place of entry up here. I just really don't have a strong sense of an entry up here. My entry is a little bit higher. Breaking the lows down in here again. Have this high volume that we're cycling between the two. 95 is important. Got the momentum coming back into the market again. Looking for the lows here. Hourly is coming way off of its highs. Let's see what happens if we get back down below the 03. 03 is quite a ways below us. $30-minute, it's right back to value area low again at 13.25. I really kind of want to watch that. Do we get below it? See the buy rejection here right off of the low. That's right around the value area low of the 30-minute chart. Buyers immediately responded, tried to, sellers got aggressive. Price actions moving down to momentum to the lower levels. All right, now it's about time to start playing here. I don't like the rejection down here at all. Up 192 on the day. Ah, I missed it. I missed it. Wait, be patient. Be patient and wait. Rude. I just missed it. Dang it. It's all right, though. That is okay. Let's go ahead and take that off right now, because I'm not back in yet. Right there. A little early on that entry, but that's okay though. Been much better if I would have hit it up here where I wanted to, right up here. but I got the order in too late. Popping up again, holding this area right here, give it a little bit of room. I don't really want it to come back up more than about that area there. Give us a little bit of room. Coming down. I don't like how we hit that area right there. If we come back down and test that again, I'm going to move my stop down to a break even. I don't like how we rotated there at all. Buyers are getting more aggressive in here. We got back through the open again of the hourly candle. I don't like holding that. I should have been out of that position the moment I saw that, and I missed it. I missed the exit for a break-even position, and it gets stopped. This is what happens when you do something dumb. But I am going to get back into the short again, anticipating this low to be tested again. This time we're going to scalp instead of looking for a longer position. I'm in scalp mode now. Looking for little bite-sized pieces out of this market. We're pretty choppy at the moment, and I love choppy rotational markets because I can trade the bejesus out of them. And that's what I'm going to do here. So I'm going to trade the bejesus out of this market right now. See if we get up here. I would like to be in this position if I could be from right about there. You're not going to give it to me, are you? We closed below that range, 27.78. I'm getting in way late. I tried to get in and it wouldn't let me because I clicked off over onto a different chart. That's rude. That's okay though. Let's get rid of that. Let's do this and let's scalp. Looking for a continuation move to the downside here. I'm risking quite a bit on this position at the moment, but I am looking for us to get back down through these lows here, and I'll be moving my stop quickly. What, no fear, how's it going? ICT is best. Yeah, don't get me started. Sure. You go on with your bad self with your ICT and enjoy it. Inner Circle trade by Michael Huddleston is best strategy, bro. Leave this order flow thing. Sure. Yep. Have fun with that. Good luck. Enjoy. Thanks for stopping by. $53 trades. No expenses. ICT can't even touch that. Thanks for playing. My idea? I'll tell you this much. I have an individual in here that used to be a pit broker or pit trader in oil, okay? His name's DJ Vito, all right? He comes in here into my room to talk to me because he loves the way that I trade, because it matches similarly to what they used to do on the pits when these used to be open pit markets. So you tell me. But I can tell you this, though, and I'm just going to be absolutely frank. I wouldn't touch an ICT strategy with your dick and somebody else pushing. I will tell you that for a fact. And the individuals out there on social media through ICT, they're all selling evaluations. That's where they make their money. Every single one of them. They're the reasons why I came out of retirement and I'm doing this here now. because of the false information and false hope that they're giving to individuals. I'm trading using prop firm accounts with ICT strategy plus discipline. Yeah, no, go for it. Absolutely. There's nothing wrong with that. Trade your conviction. Absolutely trade your conviction. Okay. And don't let anybody else tell you otherwise. All right. But don't come into a stream where with an individual that understands auctions and auction market theory itself to be able to read price and participants at the same time, telling me that magical numbers are being used by asset managers, because that's not happening by any stretch of the imagination. Those individuals that are the asset managers have never even heard of ICT, nor would they even care. And this is going to come up and stop me out. That's okay. I mean, I'm glad that you guys have your ICT. I'm glad that you guys have the, the wherewithal in that context. I'm trading like crap right now. So rude. I'm grateful you guys have that. For me, absolutely not. Because what you're saying with ICT is that price is the only thing that matters in the markets. And the pullbacks matter, and your 1 hour gaps matter, and all of these other things that matter, right? But you got to remember though, the markets don't pray to the same gods that we do. And the markets definitely do not pray to the ICT gods. I'll give you that much right now. A little late to the entry. I should be in a little bit higher. In fact, you know what I should be doing right now? Well, I do have it. I should only be short from around the 28,000 range. And I should be looking long from down here below this area. Okay, good to know. Let me get my bearings here. Again, moving stop to a break even. Okay, beautiful. Let's see if we can see a break between these lows right here. About ready to get into scalping mode. Anticipating price action to come down here into this area. I'm watching this hourly candle, and I'm really anticipating that price action is going to move through the 62.5 area pretty rapidly. It's my anticipation here. But I'm going to give this a few more seconds. I kind of churned the account a little bit. And by this point in time, when I traded this live, I was already up $400 or $500, not down $258. But I started trading much earlier than I'm trading right now. Bro, you believe you're not, or not, I'm using my brother's passport and I'm 17 years old and trading XAU, USD. I know it's a currency pair. I just don't know which one. Since like 3 years, I've started from support resistance. Now I finished my all ICT course and trading funded next accounts. Yeah, no fear. Absolutely. If that's working for you, go. Get down with your bad self and continue doing it, and continue trading it. You know, please, absolutely, by all means, I'm not going to tell you not to trade ICT, not at all. You know, it just doesn't belong in my ideology. I've been trading since 1998. Okay. And so you're not going to come in here and convince me that ICT is the best trading strategy out there. It's not going to happen. I'm not trying to convince anybody that order flow and auction market theory is the best way of trading out there. What I'm doing is demonstrating a framework, and then you can decide how you're going to trade around that framework. I'm not teaching you a trading strategy, anything along those lines, because you're your own person. The way that you see the charts is going to be different than the way that I do. The way you perceive information is going to be different from the way that I do. Nobody can create a trading plan for you, but what we can do is teach you how to read an auction and how to utilize information from participants to gain an edge in the markets based upon areas and order flow. I was looking around YouTube. This order flow strategy got like viral. I thought you would give me some info about this strategy. I can absolutely give you info about this strategy. I've been doing it all morning. I created my PMA already this morning off of auction market theory. I'm using order flow, right? Where am I looking for price action to come up to right now? Up here into this area. Why? The high volume to act like a magnet to price. Where's price probably going to go back down to? Down here into this area like a magnet. Why? Because price action is attracted to the high volume and it's rotation in there until it finds participants willing to move the range higher or lower. Okay, so it's all about participants. Where are they aggressive? Where are they not aggressive? How is price action going to behave around those areas? Okay, well, look, all right, I'm an indice trader. Okay, the XAU USD is gold. Gold to me is GC. Okay, not some sort of paired thing with the US dollar. Okay, so not everybody knows all markets, right? I trade the indices and I trade the indices in the futures markets off of the CME, Chicago Mercantile Exchange. All right, it's what I do. I can trade the ES. I used to trade 25 lots in the ES and 25 or 18 lots in the Russell. All right, and what I'm doing right now is trading momentum in the direction of overall value. Okay, I'm anticipating price action to come down here into this area and reject. Why? Because that's what price action does in a rotational market. All right, we're not in a trending market. We're not anything else. We're rotational. And we have a gap above us right now from the overnight session. And so I'm looking for price action to come into this area so I can gauge in a long, and I can look for price to move back up into the 250 and a half area. All right, that's the anticipation. That's the plan. Those are the areas that I want to do business around. What I'm doing right now is scalping different positions so I can show individuals order flow and how to enter around order flow depending on what your methodology is. Not everybody's going to have a day trading methodology. Not everybody's going to have a swing trading, right? If you can pinpoint entries off of scalps utilizing order flow, you can take that scalp entry methodology and transfer it to any time frame you want to trade anything you want to. Yeah, indices is good, but I made a mistake. I started with gold like in my first, so I continued trading that gold is like very, very, yeah, absolutely. And the first market I ever traded was pork bellies. I get it. The difference is I'm not going to come to you and say, oh, well, this is the best trading methodology out there. This is what you need to be trading. This is what you need to be doing. I'm not going to do that. I'm demonstrating a framework. I'm demonstrating a trading strategy. I'm not saying this is the best. I do know live On Thursday, trading the same day, I had 53 trades and no expense trades. They push their promo codes hard too. They are just salesmen for prop firms. Exactly. The ICT guys, that's exactly what they're doing. 100%. And then you get individuals that come into other places with individuals that understand an auction and how the markets actually work, not some not some magical concept of numbers, right? That apparently, asset managers and stuff are using. Yeah, I've heard snake oil salesmen too. I've been in the industry long enough to know. I mean, if an individual can get that stuff to work, who's to say that who for me, who am I to say that no, you shouldn't trade that way? That's not what I'm saying at all. What I'm saying is most individuals in that context struggle. Most are not passing evals. Even the individuals that are out there promoting it, most of them are struggling and they're only making their money because they're selling evals. That's truth. Anybody can watch them long enough to realize that really quick. Since I've been trading gold like 3 years, almost 4, like I know gold better than my brother. Yeah. And you get to know your market. Absolutely. I've been trading the NASDAQ since June, end of March, or excuse me, end of May. I started streaming 4 weeks ago. $660. Okay, we came down into the 660 range down here. All right, that's what's going on. That makes perfect sense. Because when I was trading this live, I had an area right up here, and I was trading through this whole area here constantly, up and down. And that's what's going on. My area is adjusted a little bit. It's a little bit lower. Makes sense. All right, let's pay attention here. Let's see what's going on in the overall context of the market condition. 30-minute chart will move me down to value area low. Value area low telling us what? We have unfair lows below us, looking for possible support coming into the market. In that support in the market, we don't want to just trade an area. We're looking for rejection from our areas. Where we're looking for in this context, we got a rejection down here in this area. Okay, right here, price action came up, made the highs, and came right back down into the high volume range. Price action has been trading up, came up here into this area, broke down, looking for price action to move into this area. So this would be our short, this would be our long, and we can scalp between these two areas in this little context of current value, just this chop, if you will. And that's the range of chop. And if you don't want to trade that cycle, then you just stay back and you don't trade right now and you wait. My methodology is like in market, every strategy works depend on person. I'm not like saying ICT is the best, but it's worked for me, and order flow seems interesting to me. So look, okay, this isn't about ICT versus order flow, because first of all, order flow itself, if you don't have context, it's not going to work well. It's just like fibs. If you don't have context of when to use fibs, it's not going to work well. You have to have context. You're coming in right now looking at what it is that I'm doing and saying, oh, he's just using order flow. You weren't here in the beginning when I went through all of the context to build what I'm doing right now that you're seeing. Okay, so you're speaking to me at the moment about what you're seeing me do out of context because you haven't seen the context of what's designed to come together with order flow. Order flow is not the answer. Short-term charts are not the answer. That's not where you're going to make your money from. It's the timing you can get from the short-term charts that can move, that you can enter around, that within the context of the other time frames. And when you can understand that concept, now you've got something you can trade around, right? That's the key. And so if ICT gives you the overall structure, okay, and context, beautiful, then use that. What order flow does for me is gives me the context of pinpointing my entry around my longer term areas. That's it. That's all it does. It's not magic. It's not the holy grail. It's not an answer. It's a way. It's a path. It's a journey to get you to be able to execute around context. My context is literally participants and price. Because think about it, if you're just using price alone, price is merely a result of the auction. That's all it is. But what creates the result? The participants. And so if you're not utilizing participants and price, you're missing half of the auction because the auction takes both. All right. And what are the participants? Volume. You read the participants of price within the context of volume. And when you bring volume and price together, you have an auction. No other methodology out there does that. And when you look at any sort of back testing of methodologies for the last 15 years, mean reversion, which can only happen with volume, is the only one that stays profitable through all market conditions. But if you're just trading price only, a lot of times you miss out on market conditions, and you can miss out on the market shift between the conditions. Because if you're trading the same methodology for every single condition, pretty soon your methodology is going to break. Why is your methodology going to break? Because no single methodology trades every single market condition, unless you're reading the auction, because the auction is designed to shift from condition to condition. And you can recognize the one thing, the one key that creates that shift. SIT does. And brother, do you know about ICT? Do you have a context about it? ICT is utilizing gaps. I don't know exactly how they're figuring out their gaps, but they're doing it off of some 1 hour time frame. And within the context of the gap, you're looking for a pullback and a retracement from that gap to move back into direction of the overall move from the gap. That's the gist of ICT. Okay? Beautiful. Absolutely. Oh my God. That means that I can turn around and put fibs from someplace into this area, look for the pullback, and there's my entry. Makes no damn sense whatsoever. Now, if you can get it to work, that makes sense for you. But the concept, just the concept itself is flawed. The concept of ICT is 100% flawed. No fear too. Add order flow to your ICT. You'll be better with your entries. You can gain point FCG using order flow. It's the whole. It's not ICT that I have an issue with. It's the way ICT is presented to people. It's like it's the holy grail, it's the fix, it's the magical numbers that they're using, behind the, and that's how it's presented, and that's how it's sold, and that's a complete 100% lie. And if an individual needs to lie about what it is that they're doing in that sort of sense to get people involved in it, and most individuals involved in the ICT are not making money. They're losing money hands over fist. and they don't know what's going on because the methodology itself is flawed. The way it's positioned, the way it's sold, the way it's talked about is a lie. That's the problem I have with ICT. No, bro, it's not like the concept are same, but only auction of volume is added to order flow. It's all same, little difference. See, that's where you're wrong. No fear. That's where you're wrong. That's where you're completely wrong. Okay? It's very different. Let me show you. Okay? See this high volume in here? I'm anticipating this low to break. You can't do that just in price alone. Okay? You can't. If you take all of this off and you just put candles, you don't know what this bar is going to do. You have no idea what this bar is going to do. Nobody does because they don't know what the next tick is going to be. When you start putting in volume into this, high volume, anticipate the high to break. If we turn around and break this high over here, anticipate momentum to come into the market. Momentum to come into the market to push us back above over here where the high volume is. I'm anticipating based upon participants, not numbers. Not fibs that the market doesn't care about. You know, I have a former pit trader in here. Seriously. DJ, Vito, what do you think? What are your actual words about ICT? Sum it up for me in a sentence or less. What is it? What do you think about it? Hey, just come up. Would you give a quick introduction about your strategy? Absolutely. It's all about auction market theory. It's all about taking the higher time frames, getting an idea of what the higher time frames are doing, and then putting that together into areas that make sense when you're anticipating possible rejection to come into the market. Price action trades around ranges, right? And in order for the ranges to be created, it takes time for them to develop. And that time creates volume within the participants. The more time something price spends in an area, the more volume we're going to have. So we don't want to enter around the rotation. We want to enter around the projected low volume areas below where most volume has traded around, so we can find rejection and look for price action to continue to move into the other side of rejection or the other side of value. So we're constantly moving in value. But then we look at the context of, well, what happens when we start trending? Well, we analyze the markets so we know the context of a trend and we know the context of balance. And we have the mechanism to know when that shift is taking place between balance and trend to keep ourselves out of trouble. That's the methodology. And then we use order flow and the auction. See, most individuals just look at price only. Well, for every buyer, there's a seller. For every seller, there's a buyer, and price should always stay flat. It doesn't happen that way. What makes price move is not anything but participants. And when participants get more aggressive on one side comparatively to the other, price action moves. Okay, so what we're doing is we're anticipating the movement in price action, but we're utilizing overall volume in the market to tell us where we're anticipating price to go, where we're anticipating price to reject, and how we're going to trade around that based upon overall context of market condition. That's the theory. That's the methodology. Bro, you know why people can't succeed in ICT? Because they don't lack ideas. They lack discipline and consistency. Sure. Absolutely. 100%. I'm just going to keep my mouth shut about ICT. It's fine. You can, again, think what you want to, have your own beliefs. I am not here to change any of that. Not at all. I'm here to teach individuals a framework that they can use to create, to become consistently profitable traders. I am here to help individuals with an intention to fulfill that intention. And how do you fulfill the intention? Through action. You can talk about it, you can discuss it, you can think about it all you want to. But unless you can get action aligned to intention, you're never going to be not profitable. You're never going to be successful at anything. It's stepping out of your habitual processes, allowing intention to come online. And when intention comes online, you're able to manipulate, the intention's able to manipulate the body. And that's how you move into something you want to move into. That's the psychology of trading right there. It's very simple. It's not about consistency. It's not about discipline. If those things were true and those things worked, then everybody and their brother would be able to work on consistency and discipline, and that would be the answer. What's causing individuals not to be disciplined? What's causing individuals not to be consistent? You answer that. Now you answer the problem. And when you answer the problem, you can provide a means of moving away from the problem and towards what it is that you want. Two ICT traders looking at the exact same chart will frequently draw different zones, interpret market structure shifts, BOS, CHOCH differently, and build conflicting stories about where smart money is trapping retail traders. Yeah. And you have to believe that there's a trap to begin with. I'm not saying that there's not a trap. I'm not saying that that's not there. I'm not saying that they're not doing that. But what I am saying, though, is it's not always happening. And if you're saying that the trap is what's, the stop runs, I just have my stop runs and the smart money is blah, 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 you're not taking responsibility for your own trading. It's somebody else's fault, not your own. That's the problem with ICT. Let me get back focus on the charts, because this isn't going to help anybody. Talking about this whole concept. It's ridiculous. So we finally got down to the area I was looking at. Only up 128 on the day. What time is it? 10:43. Damn it. I still didn't trade this day right. And what I mean by right is to match the results that I got when I traded this day live. That's what I mean by right. So I'm anticipating price action now coming through this area to move through this area pretty quickly and come down here into this lower area. Thank you so much for your info. I will try learning order flow too. Thank you so much. I wish you all the best in future, bro. You too, no fear. Absolutely. Good luck to you. Good luck to you out there. I really, really, really hope that you find success in the markets with what it is that you're doing. Good luck and enjoy. Good times. Good times. Good times. So I'm still looking at price action coming down through these lows. We're still very bearish on the 1 hour. We're still very bearish on the daily as well. We're in here in unfair lows, and I'm looking for reasons to go long. But everything right now on my higher time frames is telling me down. With everything telling me down, I really don't want to get long into this area right now. I want to wait for order flow and price action to confirm that it's ready to start going up. And this is what I mean. You can see it here on the 30-minute chart, okay? We came down, we closed below, about the 1/3 range, but really right at the open, really kind of directionalist, right? Then we turned around, came up, tried to go back up above VPOC, couldn't, rejected, and we closed just above the open of the bar. Then price action comes back up again, tries to test into the highs, can't break. We come right back down into the area again, and we're at the low of this current bar, all right? We don't want to try to fade this bar. And I show this on the 30-minute because the 60 minutes doing the same thing. 240 is going to be doing the same thing. I don't know what the 4 hour is doing. I could probably look though. 4 hours doing exactly the same thing. Everything right now is telling us price action has a probability of continuing to the downside. Now, we are in an area that we can be looking to go long from on our perspective of low volume. Okay. Low volume can move right through us again on the downside. We can always get in at a little bit of a higher price, but right now, I really don't want to try to catch this falling knife at the moment from this area. I want to see price action move below. Oh, we just did. Oh, we've already extended it. Okay, good. We did extend the low. Now that we've extended the low, that changes things a little bit. Give me a second here to get my bearings. That little conversation about ICT kind of got me distracted. Let me get back into my groove and get back focused again. 30 minutes starting to show a sign of rejection here. Yeah. This is where I should be long from. Right about here. Do we get it? No, I was too late. Okay, beautiful. Let's go ahead and do that. Let's put the stop in here. And let's see if we can get price action to continue to move higher here. I didn't realize that we had extended below the gap there. And we are currently at what? The second standard deviation? Yeah. I don't like that we're making this low here. I don't like we're not holding this area and get a little bit more aggressive on my stop here. There's no sense in taking a full expense when it's probably going to come down and break the low of this range. Perfect. So we're down 104 on the day. Let's see what happens here at the low. See if we break it here to the downside. A little bit of a higher volume down here. Let's see if we get a little below the range. Triple bottom. A lot of support below us. There we go. Let's try it again. I am absolutely fading the longer term charts here, but I'm looking for a continuation here to the upside and a possibility of breaking the highs in here of this little range. See how we have the higher volume in here, but we can't turn around when we just tested into that range. Okay, I'm a little early on the entry. And price action is having a very, very hard time going up here. A very hard time going up. And what happens if price action is having a difficult time moving in a particular direction? It's probably going to go the other way. See how we have high volume coming in here, anticipate this low to break. And this is where we could be getting a test into the lower area. You see this high volume here hold. So I can put a tighter stop in here, about that area right there. There's 118. Back into the high volume, looking for the low to test here. Locking in 60. Testing into the high volume. If we pop up through here, we're going to test the high volume here. There's the stop. Still looking for a test down here into this high volume area right down here, looking for this low to break. There's the test of the low. About ready to come down into the lower area. Let's see if we can get price action to move down there. Now we're only down 100 on the day. It irritates me because in the practice live, I'm not doing the same thing that I do live when I'm just trading, when it's just me. And that's the problem here, right? Is I'm trading differently here in this setting, in this environment, comparatively than when I'm live. And that irritates the bejesus out of me. And a lot of it has to do because I'm explaining things and I'm talking to people and I'm doing other things. When you're doing that, your whole mental process breaks down comparatively to what you would normally do. And when your mental processes start to shift and adjust, you start seeing things differently. And when you see things differently, you act differently. So you need to get used to answering ICT fans or rage baiters during live. You're getting distracted by chat. 100%. That's exactly what's happening, Ram. It irritates me. Love the stream. You trading aligns with mine, but you got to hope off 1 acre of my property that needs some work. I'll see you next time. Budget Daddy, thank you so much. I truly appreciate you. That's amazing. No, and I do, and I need to focus. It's just not the focus though. It's not just the answering of the questions. It's not. There is something off when I come in here and I come in to trade and teach. Okay. When I come in here to teach, that's one thing. But when I come in here to trade, I'm seeing things differently than I will when I'm not. And to me, that makes perfect sense. Okay. And this is why. Because when I'm coming in here and I'm teaching and I'm answering questions, right? I'm all over the place. I'm here, and I'm teaching the concepts of all of these things. But when it comes to trading, trading is no longer teaching. Trading is execution and acting. The way that you see the charts and the concept of the teaching and how to teach the concepts, you know what's happening? I will tell you exactly what happens. It just came to me just right now. When I'm in here in the live structure, I'm talking to chat, chat's talking to me, whatever it is, I'm teaching, I'm trying to explain what it is that I am doing. I disconnect from the flow of the market. And you guys have yet to see me in the flow of the market. I'm just flowing with the market. Because I'm always trying to explain what it is that I am doing. And I feel disconnected from the market right now. I feel disconnected and at dis-ease when I'm in this environment trading live because I don't have that connection. Now, the question is, can I create the connection with the market in this arena, in this laboratory? Yes, I can. And how do I do that? Excuse me, guys. I'm going to ignore you for a few minutes. All right. You guys are going to have questions about what it is that I'm going to do here, and that's okay. I'm not going to be able to answer them because this is how Tony trades the markets. And I'm just going to show you guys how I trade the markets. It's no ifs, ands, buts about it. All right. I've got to do that. And I've got to practice that here. And if I can't create that mentality here, then I can't do this in the live environment. And I don't want that to be the answer. I'm not looking at rejection here. Okay. All right. The reason why I stop myself mid-sentence is because I'm here right now just thinking in my head, right? I'm not saying rejection here. I'm trying to explain. When I'm trading, I'm not trying to explain anything. I'm just trading. That's the problem. Let's see here. Section's coming off. Still looking at the possibility of a continuation play to the downside. I can move up. All right. Okay. It's 10:50. I'm down $100 on this particular day. It's freaking ridiculous. It's so dumb. And I'm having a very, very, very hard time getting into the groove of this at the moment. So you know what we're going to do? We're going to hit reset. We're going to go to a different day. And I'm just going to see if I can't get into the groove this particular day. I'm not here to teach right now. I'm not here to do anything else. I'm here to put myself into the groove of the market. I need to be in the flow. And I want to show you guys what the flow looks like of being in the market. I don't know if I'm able to do it right now, but we're going to find out. Price action's way down right now. We're coming down through here. Do we have a breakout of this area? We sure do. We need to put a new custom profile on this particular chart here. There's our area. And we're looking at a downward continuing market condition. We could blow through these lows here, looking for a continuation to the downside. Down, 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 down. Everything is telling us down. Down to about the 970 area. So looking for this market to move down to about the 970 area today. And I don't have a short bias, just everything is telling me down. And everything is telling me down until about the 970 area. So I'm going to be looking at doing shorts down to about 970 today. In this particular day. Trading trends, which means I'm going to be scalping. And if I'm scalping, I need to be looking for the high volume, for the pullbacks, and getting a feel of the market condition. All right, let's play. Still here in the unfair low from this area below us. Price action's moving right through it. Where are we at? We're only at the second standard deviation. Easily see the 440s. But even the 440s, I'm still looking at price action to come down into at least the 354 area. And what time is it? It's 9:30 right now. Okay. 9:30. What is price action doing? Trying to get some volume up here. We have the volume below us, anticipating price action to come down. If it goes up, anticipating the test here. How long have we been in this little trend here? For a little bit. We didn't break below the low of the range either, so we're still in balance. We're coming off a value area low of yesterday. We still have the gap above us that we can possibly fill. And we have 349, which is going to be important, and 815. All right. And we're trading kind of in between each one of them. Couldn't bring us down into the low here at all. Very low volume into that low. It's a high volume to higher volume rejection. Trading in a range in the 240. What are we looking at in the 60? We're looking down on the 60-minute. Okay. All right. And the 60-minute, yeah, 354. Looking for price action to possibly move down into the 354 area. And we could possibly come up and test the 589 area before moving down. That would put us up here. Oh, yeah. Yeah. I could almost, if I wanted to, put in a limit order to sell. What the price of that? Around 590? That's not a bad idea, actually. We're going to leave that up there just in case. All right. We're at the open. 933. Do I want it there or do I want it up a little bit higher? I'm going to just leave it right there. Let's see. What would that look like? It's not bad. I don't mind that at all. Okay, perfect. Let's do that. I don't want to trade off of the open, so I want to give us a bit more time. All right. Still looking for the down, the continuation to the down on the 1 hour, 91.25. It's kind of the area that we're looking at as possible resistance into that, moving us back up maybe into 611.75. Stop is 623 right now. If we do get filled up there, it's actually closed near its mid-range here. So we could test that high up there. There we go. There's the fill. Only VWAP, but we have a lot of buying pressure in this market right now, so it's going to come up and probably hit that stop. We have VWAP holding us right now. We got structure above us, looking for a continuation down. I'm looking for price to come down and possibly test the 354 area. Almost touched the stop up there. Need to see about getting through the open of this bar, and we weren't able to do it, so we're probably going to break out of the high now. We have nothing but strong delta beneath us. Start the day off with an expense. It's always fun. Okay, starting to move down now. I'm going to go ahead and take out some of the risk out of the position, so I'm going to risk less. But I need to give this some room though. We do have this area beneath us, which could possibly add to some buyer support. But if we get through this area, we should come down here, pull back, and come back down again. So that'd be another entry point for me if we do get stopped out here. Price action came right up into the area I was looking at, rejected, came up almost into that prior range above us, but not quite. That's what kept me from getting stopped out. Now we're coming back down again. We're up 478. Price action's moving down. I don't want to take an expense on this. We're just going to go ahead and move our stop right now to about this area and just lock in $50. I'm going to give it a little bit of room. Let's see here. Where am I looking for price to go? I have a higher volume. Where's my higher volume node down here? We rejected off of this. There's got to be a high volume node down here someplace that created that form of rejection. Where is it? Where is it? Where is it? Where is it? I need to find it quickly. Right down here, I'm going to go ahead and put one down here at this area right here. So I'm going to put one target down below us. I need to move this chart so everybody can see it. It's another problem that I have with all of this that I need to try to fix. And price action's coming down. There's my target right down here for my first target that I'm looking for and continuation to the downside. Price action's moving a little bit higher, finding support from this low down here. I am looking for a continuation play, and I am looking for a possibility of 354 to be tested today. Price actions coming off of yesterday's value area low at 489. Why am I looking short? Because of where we're at in the context of the hourly and daily perspective. We do have this low volume support that we're in right now that could come in and be a little bit problematic for us this morning. And price action looking to the long side. I don't think it's going to go up. I don't have the feel that the market wants to go up here at this point in time. It may just do that, but I don't feel that at the moment. We're holding VWAP. We're holding VWAP. We break these lows down here. Price has a chance to go way down. I'm going to go ahead and put in another target here around the 430s for one more exit. 433 sounds good to me in that lower area. And then I definitely want to have a target down here around 354. That's going to be my last one. So my last one is going to be around the 354. We're going to go ahead and put that around the 360 mark. And then that leaves me one that I'm left with without an actual target. And sorry, everybody, it's not that I'm ignoring chat by any stretch of the imagination. I'm really focusing on the market right now and trying to get into a flow state with the market like I do when I trade live. Because I think that's what everybody kind of needs to, but kind of everybody needs to see. That's what I need to see in myself. And see if I can create that here in this market condition or at the live edge in this environment. Environment being live in front of everybody. All right, let's go. Trying to reject off of here, cycling back into the low volume node, continuing to find rejection. Price action's not able to move higher. We break the low, boom, there we go. Hit the momentum, to the downside. We're in 3 right now, up 193. We need to go ahead and cancel this because I need to drop into 3. We're going to lock in 135 on the other 3 contracts right now. And giving this room, I'm going to day trade this at the moment. I could try to scalp it. You know what? I am going to a little bit actually, just to see if I can get myself into the zone. So we're going to go ahead, and if it's going to give it to me, I'm going to attempt to sell another one here in this area because we're already out of one, and I'm going to scale into the position. This is how I also trade in the live and not just when I'm not streaming. This will be exactly the same thing that I'll do. I'm looking for a pullback back into this area right here to give me another possible entry for another short. Price action is continuing to move down here a little bit, finding some rejection off of this second line of VWAP. The 1 hour is still way down. If I go over to my 4 hour real quick, the 4 hour is trading in its range, and I'm still looking at that 349 area. I have 2 more targets below me. I could target the 969 today as well. Maybe I'll leave my 1. If I don't get back in, maybe I'll just leave my 1. I am going to cancel this right now because if this snaps back up there, I probably don't want to be shorting again. I need another range to develop is what I need. I need price action. I'd like to see, I don't need, that's the wrong word to use. I'd like to see price action come down, take out my target down here, move up, possibly hold this area in here, maybe move into this low in here, run a little of a sideways pattern, if you will, and then price action turn around and reject from that area and then continue lower into these lows and possibly even back down farther. I'm looking for a possibility of 969. 969 isn't necessarily what's going to happen. We can see some support coming in around the 349 area possibly, and that's going to be a reason for us to possibly go long. My target here is actually moving down, so let me move my target down with it. Okay, looking good. All right, price action is rejecting off of here a little bit. Still holding this first band of VWAP. I don't have a higher high yet to be able to put in to be able to move my stop. I am looking for a trend to develop here, and the higher high I would need in the context of a trend, and then wait for the low to be able to break that created the higher high in the first place. When I have those two things, I'm moving in a trend direction. I want to continue to move in the trend and move my stop in the context of the trend itself. Moving into the high area of volume here, moving into that high, that low, exactly what I was talking about. This low over in here moved directly almost into it. That's the low I was talking about just a little while ago. I was talking about testing the low. See how we moved directly into that? And rejecting. This market's strong. We're going to break this low here. And when I say strong, I talk about strong to the downside. It'll break that low. It's feeling like it wants to go up here. We're holding the VWAP here as possible support. Price action continues to try to move higher. All of my other time frames right now are telling me that we're looking long, but we're in areas of rejection down here off the lows, and we can get a bounce pretty easily. So you got to be careful of that bounce. We got to watch it. We're already locking in profits and everything else right now, so I'm not too concerned about the bounce. I'm protected to the upside, But I don't see anything right now telling me that that bounce is going to occur other than testing this low in here and unable to break it. Not breaking that low, bouncing back up into the high volume up here into this area, testing in here. We've got the resistance above us now. We've just broke the low. Let's see if we can get down here into this low. This area right here is a prime example for a buy. Right here in this area, testing in here is a prime example of a buy if you wanted to be long in this area. But I'm actually below all of my areas at the moment anyhow. I'm looking for that continuation to the upside. The only thing that we have beneath us right now are level of support on the daily perspective. But everything in the shorter time frame is telling us that we're going to break that. So I'm not going to listen to the daily perspective only when all of the time frames at the moment are aligned at this point in time to the downside. I'm protected in case the daily is the time frame that makes everything else bounce, but I'm not expecting it to. We're continuing to move our targets back down again as VWAP continues to move. VWAP is a dynamic target, not a static, so we want to continue to make sure we're moving with it. Would you like to consider adding session volume profile or daily volatility to chart to see key LVN and HVN for potential support resistance? I am actually. That's what this is all about right here, right? We have our lows in here. Okay, that's the support. I have a daily chart over here where I'm showing support between 538 and 384. But I'm not too concerned about that support, like I said, on the daily chart, because all of the time frames right now, I'll show you what I mean. All of the time frames at the moment, look at this bar. I don't want to go long off of this bar, not here. You know, I'm looking for a possible, hold on, you couldn't see that. So this bar right here, right? See that down right there? We've got the support beneath us right in here, okay? But nothing is telling us here that this bar at the moment wants to go long. We have no rejection. We have no anything else. Damn it. We have no rejection. We have no anything else, okay? And so that bar right there is telling us, right, that we could break through this low down in here. Okay. And I'm just looking at that possible continuation. Now we're trading in value. Okay. We're trading in a lower area of value. We've already rejected off of our highs. I'm looking for a test to continuation down. If we don't get that continuation down, that's okay. I can buy at higher prices. It's not a problem. I don't want to buy in here. I don't want to buy. I'm waiting to see if we can break these lows. Where'd it go? I just had it, but now it's gone. Where is it? Damn it. It was highlighted. Whatever. It's fine. Okay, so now this is where we're starting to see the rejection to the upside. I'm looking at this now as holding up here. I'm going to move my stop into just above this area here. See if we can get this area to continue to hold. This is the buying pressure coming in from the daily chart, right? From the anticipation of the daily chart. Other time frames coming in, possibly buying through this area, especially since we couldn't get through these lows in here. If price action is going to continue higher, we're going to break through this area, which we're going to break through this area here, which is just, you know, the low volume above us on the 30-minute perspective. All right. We haven't even gotten into that area yet. And we're automatically seeing us break down into the lower prices here. I have a feel of the market right now, and I'm not seeing the long side coming in And there's the momentum to the downside. I'm going to bring this down a little bit more, especially with that momentum. And all I'm doing is just trailing in off of this, this VPOC outer band. Price actions continuing to the downside here. Anticipate some pullback from that momentum that came into the market. Now we have a higher high, we have a lower low, we have a higher high, we have a low. Now I can move my stop comfortably right below that area right there. And now I have an area of locking in 554. We're up 1,026. I was in this short on Friday, but I didn't hold on to it like this. I got out early on a scalp and didn't get back in. And I'm not trading in that context here. I'm literally looking at current price and trading with it down here near our support around 350, 344 or so. And that's going to be here. That's the third target, and then we'll be in 1, and then we're going to wait and see what this market's going to do after that. And we're only in 2, so let me go ahead and delete this and put our stop back into here with a 2, locking in 301. We have 604 locked in the morning so far. Plus another 300, so 904. There's our third target done and over with. We have 1 left. We're going to keep our 1 up there, our stop at 149. And I'm going to see, where are we at here? We're at 1, 2, 3 bands down. This is our standard deviation here from, I don't want 4. Close this. Why did that put 4 in? Because it's still 4 up there. So I'm going to go ahead and get out of my last one down here. The reason being is we're starting to show signs of being extended on this down move. We're in the third 1, 2, where is it? Wait, where is it? I thought that was the third one. 1, 2, 3. We're down in the third band of VWAP. Okay, where this target is right now is the first standard deviation of initial balance. So our initial balance range, right? You take that range and then you just bring that range down from the low of it back down. Keep the range the same. Make the high of the range the low of the range, and then that low of the range down here, that's 1 full standard deviation of the initial balance, and the extension is right beneath where my target is right here. So that would be 1 standard deviation of initial balance already in an extended market condition to the downside. That's not a bad place to take an exit. And then we're also still in support of the daily chart at that point in time. And we just barely broke the lows of all of our higher time frame charts, like the 240, the 2 hour, and the and the 1 hour perspective. And in that context, what we're looking at here is just that continuation down to that that standard deviation, and then a possible rejection point from that area, and a continuation move then to the upside. We're going to bring this down a little bit. Is that protection line is just below us right there, and so I'm bringing it down just above that area. We don't have any other higher highs for us to be able to really move our stop. I'm keeping our stop up there right now. I know that sounds crazy to be up 500 and something and only out locking in 150. The only reason why I'm doing that is because I'm not scalping right now. I'm day trading, and I'm looking at day trading wider targets and not scalping targets. If we get a reversal here, I'm going to be looking at scalping out of the reversal. And then if we get a continuation play to the upside off of a reversal, I can get back in and continue to scalp it. The reason why I'm doing that is because we broke out of the range down here. That could be a possible trend continuation to the upside, and I'm just being careful of that. Excuse me for just a second. So now if we turn around and break this high, which we just did, right? And we come down and we break this low here, then I'll be moving my stop just above this area. Why? Because that would be the higher high, higher low. Higher high, lower low, excuse me. Damn it. This right here, this area right here at this price is not a bad area to buy. It's not a bad area to buy at all. In fact, that should be a position where I should probably be long right here off of these two high volumes right here. That's probably something that I just missed, and that's okay. That's okay. If you miss positions, it's fine. But that context right there, these right here, the high volume stacking up here, we can't break the low in here, okay? And if we move this or remove this, right, look at the low volume on both sides, okay? And if you came in here and just looking at a scalp, right, you're already moving your stop to a break even. You're not going to take an expense on the position, and the position does continue lower, that's okay. But we are looking for price action to possibly move higher from that area. Looks like IVB strategy with projection works just fine for new traders if they refine entry to be profitable. The IVB strategy, it's okay. I wouldn't advise it. I don't agree with strategies. I really don't, because strategies don't take into account current market condition. Okay, that's the whole problem with strategies. That's the whole problem that I have with ICT and I have with anything along those lines. IVB, no difference. Any of those things. It's a strategy. Strategies work in the particular context. Why did the context of the IVB work today? Only because we've been trying to extend the range to the downside multiple times. Every other time we've been trying to extend the range to the downside, only one time this last month would the IVB work on the downside. So you can't take this example and say, okay, out of context, or in this context, IVB would work. IVB works because we should be anticipating a continuation into the downside here. Granted, great support in the daily perspective here. There is support beneath us in the daily perspective. I am fading that daily support. But I'm fading that daily support for a reason. And I'm fading it based upon what I'm seeing, based upon the feel of the market, based upon what's going on, because there is no reason not to be long this morning at 500. There is no reason not to be long this morning at a 500. All right. It's at that point in time, it's a crapshoot. Long or short, long or short. The main reason why I didn't go long there is because we already tested into the LVN of 590. We rejected it off of that area after already coming off of value area high. So we came off of value area high, we rotated back into value area to VPOC, and then we turn around and go right back down into value area low. All right, at the open of the market. Then the open of the market was not able to extend the range. We were not able to hold VWAP. All right. When those things put into context, I want to go short and see if we're going to break the daily perspective. All right. That's the whole reason for this. Now we're going to go ahead and put in 4 again for our quantity for our trade. And we're going to go ahead and look for a potential long position from this area right here. Let's see if we get the pullback to go long. And I'm going to go ahead, because if we snap down here, we could easily break through this area. And so I'm going to put in an immediate stop in case that happens, just in case the momentum comes in, fills us, and just trades down. We barely broke the low on the 60-minute of the prior range. Okay. And we're still looking for a potential continuation to the downside. But if we're going to try to catch a falling knife, down here is not a bad place to start looking to catch a falling knife. Not even a little bit. It looks though like I might have missed the move here, the pullback here, and this that made this low might be that pullback, but I don't think so, because we broke that low. I really anticipate that we're going to come back in and we're going to test the areas of high volume below us before we start moving higher, only because of the strength of the downside. I think sellers are going to try to hold this high up here, move us back down into the higher volume beneath us, and then we're going to decide at that point in time if buyers are going to step in or not. And there's the fill. So there's the fill at the high volume. Price action started to move a little bit higher, not enough to be able to lock in profits yet or anything else. I do want to kind of keep this area, but if this snaps back against me, I don't want to take an expense trying to catch a falling knife. Rotating between the two high volume points here. Now we're back above 200. Now we're going to go ahead and make sure we don't take an expense trade here. Price action could come down now and test into this high volume range, which would create a higher low if it did. Now, do we reject and come in here and test the high, or move to the open? Not so much. We're going to come down and we're going to test this lower area of range again. Do we test into here? As you notice, I just bought into 2 instead of 4 here. I don't like the fact that we're not breaking higher here. I don't like the fact that we're testing into this range. There we go. Okay, there's the break. Perfect. Barely broke that high. I'm going to move my stop right below the VPOC of the current bar. See if we can come up here and test VPOC up here. It's 10:05. We're holding this VWAP, the second band here. Still coming off of the third band. Holding that middle band as possible support, at least in terms of the stop. That's why I'm not moving the stop right now. Plus, we really haven't moved high enough yet to be able to really start locking in potential profit. Moving the stop too quickly, and you can lose your entry position. All right, so buyers are not holding this area right now. I'm kind of anticipating this low to possibly break. We're still holding the VPOC right here, so I'm just going to kind of wait and see what's happening here a little bit. We are coming off, we're right back into the support area of the daily again. And we could break above here, and if we do, I'll start scalping to the long side through a break here of this area, right up here. But until that happens, I'm looking for very little activity on my side. But for that to happen, we need to close around the top of the bar itself. And we're looking for price action to move back up into the 431 area. If you notice here, I'm getting in with 2 again. I'm not getting in with the full contract size because I only get in 2 here. In case we don't come down here and we break this high, I at least want to be in something. So I'm splitting my position size in. Why did I do that? Because this would be an area here where I anticipate price action to come back and pull back to. And if we break the high, we could see a continuation play to the upside up into the 450 area where I was anticipating price to go in the first place. I don't like how we're filling the high up here, so I'm going to go ahead and lock in with a break-even position. And we can get in back down here at this low if we need to. I do like how this bar closed, so coming in down here, getting me into these positions would be just fine. I would be happy with that. I'm going to have a very tight stop on this one in case if it does come down and it just trades through. I wouldn't anticipate it to come through much below this high volume area over in here. You can't see it beneath the targets. That's why I'm talking about another chart that you can't see off of it, because I'm trying to get you guys to see the orders of what it is that I am doing here so you can see what's happening. I'm not trying to and then this covers up those areas and I still have to see them on my side. That's why I'm kind of talking about another chart, but it's the same exact thing. It's just, I'm circling around on that chart instead of this one because I can't see everything on this one the way it's set up. And I need to be able to have everybody see it on TikTok. But you can see it right here. See the higher volume up down here? That's why I'm putting my stop right below that area, because we come down here and test into this area. I'm anticipating price action to come down and to hold that, not break it. So my stop would be just below it if it comes down and gets me. I may have missed a scalp position here. I don't really want to take it off of the high because I'm anticipating momentum to come in if we take it off the high. Look at our delta. See, we have down delta here. Watch the open of this bar. We have down delta, right? Watch the open coming down. Do we break the low on the down delta? We do not. We come back up and we test the open again. Now we have the down, right? And we have that down delta. Now I'm closing my positions here. I don't want to be long from down here. Now I want to wait. Got with a small expense there. Price action was not doing what I wanted to be doing from there. So I got out with a small expense. Still wouldn't be hitting my area here for an entry. Here, let me put this on global. That should be easier for everybody to see. So now you can see where I'm at my mouse over here, right? So that would be the entry that I had before. But now I'm looking for a continuation play to the downside. Momentum possibly back down here into this area. Nope, not going to get the push down. We're going to go up. This right here is telling me we have strength at the upside now. Now that we have strength at the upside, I can start looking for just long positions instead of trying to continue to the downside. That little move right there with this high volume down here is telling me that buyers are strong in this market, especially after this down that we just had through here. Now we're looking for a potential long. Look at this delta. See how this delta is coming off down here, off of its lows? We get through the open of the bar. But that delta shifts here. We're going to see propulsion above here and momentum above the highs. Like I said, guys, the feel of the market. I can't teach that, what I just did right there. I can't teach that at all. But I can absolutely see it when I'm locked into the charts and I just have my feel. Not feel. It's just a feel. It's, how do I explain it? You never know what price is going to do. But sometimes you get into a position, right? And you're getting into it. So it's almost like to test who's actually in and who's not. And there's no better way of getting a test of what the market is doing other than being in it. And when you're in it and you see it just snap back, or you see it do what it just did there down here at these lows, okay? It's like, okay, the market doesn't want to go down any further here. And if the market doesn't want to go down, what is it going to do? It's going to go up, all right? And that's just how it felt. Breaking the highs of VPOC again. Or of VWAP, excuse me, not VPOC, VWAP. So what we're doing is, what I'm saying is, we're holding VWAP as resistance above us, okay? Now price action, I bet you we're going to get a test up here. If this market wants to come down, I bet you we're going to get a test up here. And I know that might sound crazy. That would get that big of a pullback, and it might be. I almost shorted here just a moment ago, but I didn't. I held off. And then get the pullback I was looking for. And price action's back down here into VWAP again. Okay. So now we need to wait. Now we need to wait and see what price is going to do here, because directionally we're still looking short. This area did not hold. I should be long right here. You know what? We're going to do it. We're going to go ahead and go long here. And I'm putting my stop just below here. And if it comes down to me, I'm going to get in with 2 more right here in this area. And then we'll be in 4. We should be good to go. Again, a scalp for about $100 in revenue here, moving stop to a break even. I'm going to go ahead and cancel this because price action is already moving in our favor. I'm going to lock in $20. We're going to get rid of this down here. I'm going to move my stop below this low right here, locking in 31. Okay, stopped out. And price action is not wanting to go higher, which means price action doesn't want to go higher. What is it going to do? Plus it. There we go. The price action is not going to go higher. What is it going to do? It's probably going to go lower. 42. Go ahead and put a stop to a break even here. Below this area, though, we're actually getting below the area. Do I want to open up the target? I believe I did want to open up the target there and just get out with 1 there, but that's okay. We're out with 2. We've been holding this area all morning. It's the first time we've actually been down into this area, but we're already seeing rejection. So now if we're going to get rejection off of this area, we're going to see a pullback up here into the 351 area. And anybody talking in chat, I do apologize. I'm not ignoring anybody. I'm locked in. I'm with the flow of the market right now. This is what I need to be doing for myself, and I think for chat as well, for everybody. I really feel like this is what's going to help individuals, because this is trading here. Now we're getting that pullback into this area, right? Where is that? Right here. Let's go ahead and pop this into 4 just in case. We still have that rejection beneath us. We're hitting the higher volume here where apparently sellers were trying to get aggressive. It's just a dot. Just look at it as high volume or another area of high volume. Now we're in 4. Let's go ahead and put our stop loss right below this low. For the high to break up 200, we're going to put our stop to a break even. Testing this high volume over here. It's currently holding as resistance, which means we can cycle back down to here. And if it does, I'll get out with another, or I'll get back in with another position. If we come back down here and test into these areas, the whole thing is what happens if it snaps back on the test and it doesn't become rotational. We're up 300. Let's go ahead and lock in a little bit more revenue. We're going to lock in 70. Higher volume, anticipating the highs to break. And then go ahead and lock in 202. We're up 342. The only reason why I did that is because the momentum didn't come into the highs here. And the way that these highs are coming in, we anticipate price action to possibly come into momentum. In the daily perspective, we're coming into what was support, which can now be resistance. So I don't want to give this as much room as I normally would. This isn't a day trade. This is a scalp. And then go ahead and put the stop right down through here. We're going to lock in 300. We're up 442. We're locking in 314. Another break of the highs there. Immediately rejecting. Have the higher volume down here. Watch Delta. Delta's still green as we came in, tried to test the lows. This Delta lift as we're coming into the highs. Delta lifted, but then it came off again. I'm going to lock in a little bit more revenue here. Up 500, locking in 380. Retesting the highs here. We're not holding them, so I'm going to lock in a little bit more. I don't know what we got there, but we're up 21.44 on the day now. Let's go. Starting to show some rejection here a little bit. And what do we have? Not really much. Not really much to go off of here. This is a kind of a I don't want to say odd. We're just kind of in a mid-range of price right now. I'm not seeing really anything right here of support resistance. I'm expecting price action to continue moving higher. So we're moving directionally. I would expect buyers to continue to hold this area because I'm not seeing reasons for sellers to come into the market here. Then above us, we got this area around the 419 where we could possibly see some sellers coming into the market. But with this strength here, I don't want to turn around and try to sell that now. This is a nice, good, strong market at the moment. We have buyers participating at higher prices, continuing to buy through market orders as we move into the highs. I don't want to try to fade that strength right now, especially the way how everything else is shaping up at the moment. We're coming into yesterday's low as well at 430. Where is that? 431. So we're right around there. We're coming into that. This could absolutely act as an area of resistance. Damn it. Do I short here? No, because we have too much strength right now. I've got time. Let it develop. Let it develop. I don't need to press the envelope and actually short here from yesterday's high. Let's go ahead and wait. Although the short would have worked out just fine, but still. Probably coming down here into this high volume area right here, anticipating some buyers to possibly step in here at this price. And if we don't step in there, we're probably going to step in right down here in this area. Between here. Buyers starting to step in, rotational between these two. Buyers are strong enough to get us through here. What happens back up here again when we test? If we're strong, the price action is not going to get back down below the lows here. Okay, see, sign of weakness right there, not strength, weakness. So we have a sign of weakness now. And in that context of the weakness, I'm anticipating price action to be rotational down through here, not up here. Okay, we are rotational, barely broke the lows down here, came back above VPOG. So that weakness that we saw, right? This is where buyers were once willing to defend. We just came up into that area and sellers defended. And so now if sellers defended into that area, we would anticipate price action to come back down and test these lows. If we don't test the lows and come back up above this VPOC area here, we could see anticipation of price action to the upside. Here's our VPOC over here, possible rotation to this area. This is where the buyers were once. This is resistance right here, right? Buyers, we're looking for buyers to be strong up here into this area. And we're right now showing signs of weakness every time we get up there. Sellers get involved, right? Now we have the sellers below the open, but look at we're not getting the market orders to the downside. What you should anticipate price action now to come up, test this high, and possibly break it. If it does, it's going to break it with momentum. Why? Because that's where buyers were defending the area before and anticipating price action to cut, or buyers to step into the highs and push the price higher. Boom, just like that. See how that happened? It immediately rejected, but you see how quickly that happened. That's what you should be anticipating. If you're locked into the market and you're really understanding order flow, you should be able to see that real time. And now what? This is now the new area of resistance in here. Why? Because we popped, right? Sellers defended. How do we know sellers defended? Because they came back down again. But where are sellers going to be strong? We have to see it through the open. Right now, buyers are in control. We need to see what happens if price action comes back down below the open. And see, when he came in, didn't even test the open and started making new highs. Who's strong in the market right now? It's definitely not sellers. Now, see that rejection up here? Now we have the sellers. If we come back up here and we test this area, what should we expect? We should expect sellers to come in and defend that area now. Not buyers, sellers. See how we can use order flow itself and the feel of order flow in order to be able to turn around and find pinpointed support and resistance areas, not just from LVN, or not just from large volume nodes or anything along those lines, right? Literally watching the price action feel around the area and how the participants are acting and behaving what we'd anticipate to act and behave in those areas. And then when they start acting differently around those areas. Okay, we're filled, right? Don't know if I want to be, but I'm filled. Okay, where are we anticipating price action now to come back through the open? Okay, this is where buyers defended before, and then the sellers turned around and extended range of the bar to the downside. Okay, so what are we anticipating? Sellers to come back into the market here. Okay, that's what we're anticipating. But look what's happening. Sellers are trying to get back into the market and the buyers are taking over. What does that mean? We need to be defensive on our stop. We don't want to take a full risk here. Be defensive on the stop. Okay, take a much smaller risk than you're anticipating, because what you're anticipating to have happen, buyers are actually stepping back into the area instead of the sellers. The sellers tried to. We noticed the sellers in there. They tried to get price lower. Okay, but they couldn't. All right. So take your small expense. You took a shot. It didn't happen. And if it's not going down, if price isn't going down, what is it going to do? It's going to go up. And if it's going to go up, what could it possibly do? Break out of these highs. And if it does, momentum. And you can buy this here, anticipating the momentum to come into the market to the upside. Where are you wrong? Again, you're wrong over here, where the buyers started getting aggressive into the market, right through here, right? Because below this, if you get below this, the sellers could possibly be aggressive. See if the buyers turn around, buy, anticipate them to bring up the market into that high, and they didn't. Okay, now we're rotational, and now we need to wait for a break out of the range before we take another position. Now we're starting to break out of the range to the downside. Where we expect price action to come back down to the protection, come back down to the lower band VWAP. And it's 10:30. We have another half an hour of trading, and then this day will be done. Right now we're up 1874. I think the high was like 2300, somewhere right around there. Anticipating price action to continue down here from this area. Price action is having a problem coming through that area, so I'm going to go ahead and move it to a break even just in case it does snap back up. Okay. It was having a hard time breaking through the area over here and kept on snapping up, snapping up, snapping up. Where's our area of resistance? Right up here. Where's our area of support? Right down here. Having issues getting through the low there. Snap back up through the low. The market doesn't do what I anticipated to do. I want to be out with a very small loss or a break-even trade. And the market's not doing what I anticipated to do on the entry. I was anticipating it when it broke through this low here, okay? When it broke through this little area right over here of that support and resistance, I was anticipating the price action to break through this low and immediately start trading lower, and it just didn't do that. And so I wanted to be out with a break even in case it snapped back. Delta's not supporting this right now, this little up. There we go. It's a little long. Break through the open of the bar. I don't want to be long anymore. Need to get through that high volume just above us. See, beautiful. Stop right above it right now, and then boom, snap back up again. Right? That's okay. That's all right. We took our shot. Thank you for streaming live and teaching. I need to step out for a moment. Hope you will have a good practice session. Hey, thank you. Thank you, Ren. Appreciate you. Your spider sense? Yeah, exactly, Daniel. Just trading order flow. And I apologize, I'm not talking to anybody in chat. I don't want anybody to feel like I'm ignoring them. I don't want you guys to feel like you're not important. What I'm trying to do right now is just, this is how I trade live when I'm not streaming, because I'm in the flow, right? When I'm streaming, I'm trying to teach, I'm trying to answer questions, I'm trying to do other things, and my mind is cluttered with other information. So right now I'm just trying to step away from all that other information and show you guys what it actually means to really be able to trade order flow, right? What does it mean to actually come in here and actually trade what you see and what you feel in the charts? Okay, I'm absolutely 100% trading around market context. Okay, but market context right now is telling me that the market go long or short. What I want to do is be positioned in the market, so when it breaks one direction or the other, I'm in. That way I don't miss the position, right? But when you're trying to do that on both sides, when you're in an area, okay, of where it could go long or it could go short, it could take time to develop into that. And what you can't do is utilize your primary stop in order to be able to do that, because if you do, you're going to get smoked, and you're going to run through all of your positions, and you're not going to have anything left over because you hit your maximum risk on the day and you can't get into the position. Okay. What I'm trying to show is how we can stop all of that from happening and being in the positions when they matter the most, when the momentum comes into the market. I just haven't hit one of those yet. But you know what? If I keep doing what it is that I am doing, eventually one of them is going to hit. And that's where you're going to turn around and you're going to bring your profit back up again. Okay. I have had a drawdown now of about $400, back now only down a little bit less than 300. Okay. Or just over 300 in the drawdown. Okay. But even having a $300 drawdown doing this right now, whereas up 2,200, now I'm up 1922 on the day. I mean, it's not that big of a deal, but that's exactly what I'm doing here as I'm just coming in and I'm trading the order flow, trying to make sure that I can get into the position when we get one of these breakouts coming in, because we're in an area of interest on the daily and longer term perspectives. The 4-minute is still absolutely, or the 4-minute, geez, the 1 hour is absolutely still telling us nothing but to the downside right now. And so I've been trying to do these longs. Let me stop that real quick in case we come into this area. But man, I really, 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 really would like to be long here in case we come back and test the highs. But 4-minute, everything else is telling me down right now. Let me hold off for a second and watch this. Let me get back into my groove again. I'm kind of out of it at the moment. So let me start talking about order flow and we'll get back into it. Again, questions and those type of things, I'm going to be back and able to answer all the questions here in just a little bit. But right now I need to finish out this trading session. I only have 23 minutes left to be able to trade on the day, 11 o'clock, and I would be done. So let's get back into it. Price action barely broke the low there. We have our volume weighted, our VPOCs above us acting as possible resistance. Price action's coming back down again. I want to see what happens down here at these lows. This is where I would want to be long, is right here in this area. Price action, though, is trading through, and look at the delta. See how the delta is way down, but then you turn around and you have the buying pressure coming in. It's so difficult for me not to be long right now, but I don't like the direction of the 1 hour right now, and I don't like the fact that we're below the open or below the close of the 1 hour at its low. I'm anticipating price action to move down here. It's not moving up. Oh man, this area. You know, let's do this. Let's see if I'll guess in. Will you get me in? No, you're not. Nope, you're gonna go down first. Okay, beautiful. That's all right. Go ahead and do your thing. Do your thing. Do we get back through the open? Do we break this low? That's what I'm looking at right now. And we've already gone down. We've already gone down. The delta's there. Do we get through the open? Beautiful. There it is. Okay, now I'm anticipating potential momentum to come into the market to the downside. Don't worry, I'm not going to take a $300 hit. That's not going to happen. I'm doing that in case price action breaks back up again, because we're here in this area of possible support in this market. Here's our high right here. Here's our high volume. There's the down. Do we break? We do not break. I'm going to take a very small stop here if we get back through the open. That right there, that little thing I did there, we broke down. But price action didn't do it in a way where I was comfortable with it because of what the area that we were in. And I moved my stop to just outside of the break even. I could have kept it up here. Okay. But this was the move I was anticipating. Now, here's the thing. A lot of traders would be so upset with themselves right now if they missed the move. Me, right now, I'm grateful. I'm grateful for the opportunity. I'm grateful to be locked in. I'm grateful to have been able to make that call and be in that position and still be able to manage my risk properly in case the market did opposite of what it just did. I can't tell you guys, that's skill right there. And I am so grateful to be able to have that skill. And look, now that it's broke, right? It's broke. I'm anticipating the down. I'm back in case the down continues. And guess what? The down continues, and now I'm back at a break-even trade again. All right? And I'm looking for momentum in here. And breaking a little lower low off of an overextended market is not the down that I'm looking for. Back to 1942 again. Okay. So coming back up, you know, it's, this is, this is not LeBron James basketball. This is the skill of being able to play at that level. And I'm not saying I'm at LeBron James level of trading, right? I'm not saying that at all. What I'm saying is this is how we develop the skills to get to that level. And then it takes not just skill development, but practicing the skills to get there. And that's what I wanted to demonstrate today. And I'm so grateful for the opportunity to do that. Now let's get into some of these questions. Oh, Ram, I have 300 subs on YouTube. Thank you for that. I had no idea. Thank you for letting me know. Um, I appreciate you. Okay. Um, but let's see. You're trading order flows, your spider sense, Daniel. Yeah, exactly. Kinda. It's I've been doing this for a long time, right? And so it's having that feel of the market, the spidey sense, you know, whatever it is that you want to call it, right? But we need that. And if you're trading indicators, you're trading, you know, pullbacks, you know, you're missing that. You're never really picking that up. And then you're just expecting your methodology to basically be an ATM machine. The problem is the markets were never designed to be an ATM machine, at least not for us, right? And so we have to adjust. We have to adjust and possibly, you know, try to become that ATM machine, even if it's possible to turn it into an ATM machine. But you can't do it just off methodology alone. You have to be able to do it by trading. And even here I'm talking and I'm still in the flow. Once I can get into the flow, I can stay in the flow. But I'm not so sure right now they even want to be in this trade at the moment. It's definitely not doing what I anticipated it to do. And I might be in the flow, but I'm not watching it the way that I was. I'm going to take a pretty large expense here that I didn't want to take because I didn't move my stop as it's coming against me. So let me get back in here and pay attention to what the hell is going on. We have the resistance in here. Do we hit that resistance again and break it? Nope, we do not. So I'm going to move my stop. See how that works? Right? We have the resistance coming in, right? And we're still, I don't even know why I'm going long in here, honestly, because the 4-hour chart is still telling us short. So I just took an expense trade, but now I'm going to turn around and try to get that back. And I'm going to try to get that back now because we're still moving into the directionally of the 4-hour chart. What I'm looking here is we're overextended in the context of VPOC or VWAP. That's the only issue that I have. We're overextended. But see that? See how the buyers are trying to step in and then we just immediately sell? These lows, I'm anticipating these lows to break. And if we get these lows to break, we have ourselves a nice little trade here on the downside. But look what's happening over here down at the bottom though, right? We got buyers stepping in. Every time we turn around and try to get lower price, the buyers keep stepping in. Here's our support right down here in this area. We had resistance up here and we've already broke that resistance. Price action is going to go up. I picked the wrong side this time. And this is the one that I'm holding on to my stop, right? I didn't hold on my stop on the one where we just broke down here, right? Why am I holding on to my stop here? That's the problem. That's when you know you broke flow. That's when you know you broke state. That's when you know you start doing the wrong things. And that's when you start giving money back to the markets. I'm going to show you again. We're going to do the whole thing all over again. Okay. But this time I'm going to try to put myself into flow and see if I can't turn around and do it properly. Okay. But that's the example right there of what not to do. All right. Our 4-hour is still down, but everything right now is telling us to the long side. We come back down here into these areas. We do. Do we hit the volume there? No, not yet. No, we did, but we came back down off of it. So rude. Okay, let's watch this. Let's watch this. Let's watch this. Let's watch this. There's the down. Oh, so much volatility in here. I don't like the volatility. I don't like the volatility at all. I don't like being in this volatile mess where it's going both sides so rapidly. And like I said, this is where we give the money back, right? The money back that we earn throughout the day, this is where we give it back. We give it back when we lose flow state. And I'm continuing to do this to show that, to prove that, okay? because I'm trading differently than I was just trading a few minutes ago. I broke state by coming in and starting to talk to chat, and now I'm not able to bring that state back in. I hope you guys see that. I hope you recognize it. I hope you can see that in your own trading. Use this as an example and a demonstration of that. Because what would I be doing right now with what I was doing before? Right now, I'm hoping and praying that this market's going to go up, and it's not. It's going to come down. And before, I wasn't hoping and praying. I was trading it. I have a lot to learn. I have a lot to work on in this context of trading like this in this environment. I have a lot of training to do for myself with this. A lot. I definitely have not earned the right to trade live while streaming yet. I'm still going to do it in the prop because I've started it. I need to finish it out, but I have not earned the right though to do that yet because I haven't learned to consistently lock myself into the flow state while trading in this environment. Damn it. And I was doing so well there. And here's the problem. Once I break state, okay, this is actually a great example, right? This is a great demonstration. Broke state. How do I get back into state? Okay. Price action came back down here. It's rejecting off this area. I should already be moved into a break even, and I'm not, and that's okay. I didn't do anything. So because of that, I'm not going to act right now either. I'm going to wait. Not because I'm hoping and praying, but because I'm going to wait to see what price does here, because I wasn't paying attention to what I was doing. Now I need to get my support and resistance areas back again. Not support and resistance of, areas and levels and those type of things. Where the support and resistance is within support and resistance within order flow. And so here we got the high volume, right? We came into the high volume, immediately rejected. We got the delta down here into the down, but we couldn't get through the open of the bar. What is that telling us? That's telling us that buyers are in control of this bar right now. If buyers are in control of this bar, this is where the buyers are actually, this is where the sellers are coming in to resist, and this is where the buyers are stepping in to support. So we got support, we got resistance. We got support, we got resistance. Now let's see if this helps me get back into the flow state. And price actions over here, coming back up again, hitting that resistance, but the buyers came again strong. There's the buyers coming in here. Beautiful. Now, where are the sellers at? The sellers were right in here into this area, and we got the buyers in here. What do we have above here? Sellers. We get back above it again. What happens? Do we break these highs? Do we come back in and test these lows? Now I've given back like $1,000 to the market. And I keep missing the bars of momentum too. I missed this bar and I missed this bar. At least this bar I was in. This bar I was too, but it was in the wrong direction, the opposite direction. This bar had it all set up. That was absolutely amazing. This bar, not so much. And that's okay. Because I got out of state, but now I'm back into state. So let's turn around and trade. Price action's coming back up again. Look for momentum to the highs. Should test this. It should test the high. It should hold it. Should hold it now and break the highs. There we go. Good, good, good. Just trailing this through. Up 100. Locking in 54. I've taken a few expense trades in a row, so I'm just making sure that this doesn't turn into expense. 164, we got 200, locking in 90. We're going to leave it there. I could move my stop over here to the high of this bar right over here. We're going to go ahead and do that, but we can also move back down into VPOC as well and test the lower area, but VPOC shifted up for us. We tested that instead, and price action still moving the highs. Now we're holding that. We didn't break the highs, so we're going to go ahead and move our stop up here, locking in 190. Why? Because we're holding VPOC, but we're not breaking highs, so we're probably going to cycle back down lower again. There's a cycle down lower. Now we break the highs. And where could our target be? Up here at VWAP. Now I'm looking for a little bit bigger of a pullback here. The pullback I'm looking for is right down into this area. Let's go ahead and put a target in here for an entry. There's our long. There we go. Now we're in all of our contracts. Price action's moving up through VWAP, coming up. We're about 20, locked in break even trade. We're back up to 1423. Price action's breaking that area now. Beautiful. That's why I wanted to get out. Price action's coming back up through here again, where we were holding. Damn, I got in too late. Okay, it's all right. What happens when you get in too late? Just go ahead and put your stop in. Wait and see what happens. Back through the open. Don't want to be in if it goes through the open again. The highs are coming in. We're going to go ahead and just bleed out risk as it's going up, because we did get in a little bit early into that position, and we might not break the highs. It's 10:52. Price action is moving lower now, back through the lows. Anticipated to break through this whole area over here. Moving into this high volume. Let's see what happens up here. There we go. Completely on the wrong side of the market. I'm not even sure why I went short there, to be honest with you. I don't know. I have other things going on in life around me right now, outside my office, and I'm kind of focusing on that at the moment. And I can't even tell you what I just did there in looking for the short. I have no reason for that. So let me see if I can get out of this position with kind of a break-even trade. Looking for price action to break here. There we go. And then I need to get going and go get some other things set up and done. I've been streaming a little bit longer than I probably should have this morning, but that is okay. I love this, and that's exactly what I want to be doing. So there we go. That's trading. Okay. That's trading order flow. That's when you're able to lock in, right? And I wasn't just paying attention to the short-term chart either. I was constantly looking at the 1 hour, the daily, the other charts, as they're coming through. And it's 10:55, it'd be time for me to quit anyhow, in this context. So I was up about $2,200 on the day, ended up being up only $1,469. Took, probably $400 or $500 of expenses in there when it got locked out, and then I locked myself back in. But then that last trade was pretty bogus. All right. Well, thank you so much, everybody, for being here. I truly appreciate each and every single one of you. If you have questions about this session, join the Discord, ask your questions, please. I will definitely get back to you in that. Here is Discord for everybody in TikTok, and here is Discord for everybody in the other platforms. So if you have questions, comments, concerns, join the Discord, ask them there. But that was about as much of a masterclass on an order flow as I could possibly give. There wasn't a lot of teaching there. That's just me being able to pinpoint the support and resistance areas of the order flow itself, of where the participants are in the market. Remember, it's not just price that we should be concerned with. Price is merely the result of the auction. Knowing where participants are, knowing where the buyers and sellers are, knowing where to be able to read the buyers and sellers, where you're anticipating them to test, where you're anticipating them to possibly break. And when they don't, the market's doing something else instead. So if you were looking in that area for a particular reason, it's doing something else, you probably want to start looking in the opposite direction you were looking in the first place. All right. This isn't about having a bias. This isn't about being right. This isn't about saying the market's going to go up today and we're just going to go long. Okay. This is about trading areas, about pinpointing areas on higher time frames, keeping your eyes on the higher time frames in the context of what the market is doing directionally, and trading in the context of that direction within the context of your areas, within the context of market condition, within the context of order flow. That's how you bring it all together. So thank you so much, everybody, for being here. I truly appreciate each and every single one of you. If you have questions, join Discord, and we're just going to kind of go from there. I'll be back on tomorrow. I might even back on this afternoon later on. We'll see where we are at. But again, thank you so much for joining. Thank you so much for attending. Truly appreciate you, each and every single one of you. And until next time, as always, be safe, be kind, and know that you are loved. Enjoy. Thank you.